as we had the conditions in place to see a new bull market, but that bull, but it couldn't achieve liftoff, and that's given the kind of the bearish camp, especially now as yields move higher, a chance to reassert itself, and that's what we're seeing. We're seeing it from a breadth perspective. We're seeing it now over the last couple of months, in terms of the S&P 500 as well.
Okay. So this is another important one to really kind of pound the table on, because this is something that you mentioned to us a lot that is looking pretty good right now, which is basically that you shouldn't believe an index trend. I mean, there's also the argument maybe the S&P didn't even start trending higher. We never got a new record. We got this massive rally, fell short of the old high, and that breadth analysis would suggest we kind of should have expected it to peter off eventually because it just never saw the internal pickup.
Yeah, that is exactly right. It's fine to see the index attempt to rally, but if you're going to see sustained strength, you almost always see breadth improve along with it. It doesn't need to lead the way. It doesn't need to be stronger than the indexes, but it needs to be moving in the same direction as the indexes. And when you have the indexes rally, but again, more stocks making new lows and new highs, that's the generals going in one direction and the rest of the army going in the opposite direction, and that's not how you win wars.
All right. Will, I got one more that I see people talking about that you address also, which is the value line geometric index. Okay, so take us through what exactly that is. Remind us of that. Some people really like to watch this one. It's never been like the most profound one in my mind, but I'm hearing a lot about it right now. How come I'm hearing so much about it right now?
Well, there's a couple reasons. One, so first of all, it looks at the median change of a universe of, I think it's like 1,700 stocks. So it gets rid of the influence of those mega caps in the S&P 500, the Apples, the Microsofts, the Nvidias. So it gets rid of that influence. And here what we're looking at is a chart of it going back to 2018, and just the lack of progress that we've seen from a median stock perspective is in some ways impressive, in some ways concerning. 67 times over the past 5+ years, it's crossed over that 550 level, and kind of in the middle of the chart there. Is there something magical about 550? No, but the fact that we keep retracing the same ground suggests that we're not in a bull market. Bull markets take us to places we never thought we would see. You could also argue that it's not really a bear market. Bear markets take you to places you never thought you'd see again. We just keep bopping around in this level. It's more of a sideways market, and I think that's something investors need to wrap their heads around, that this could go on for a while. This periods of strength, periods of weakness, periods of strength that at the end of the day don't amount to much of a net gain.
Okay, love it. I think that's maybe why I'm hearing some about it, because ultimately in a pretty bearish list of charts we just got from you, it's the one that does kind of leave a little hope that maybe this could just be a churn and not a deeper reversal. Great stuff, Willie. Thank you as always. Really nice work.
Thanks a lot, Oliver.
Absolutely. Willie Delwish, investment strategist to High Mountain Research. Coming up, we got the bells. Russell kind of fading. We'll see if we can hold on to some of the strength when we come back about 3.5 minutes.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus the satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
Stocks fading a little bit from an early pop. We lost the Russell. Small caps, they're trying to hang in there. Same story for the Dow. At least the dollar is working in the right direction for bulls. So are bonds, seemingly. There's a little bit of a rally in treasuries this morning of 20 basis points as the 10-year back down below 4.8 after a rip-roaring couple of days on the back of generally better than expected data. Later this morning, we've also got some important numbers coming out. We'll hit them when we hit them. It's about a half hour away, but it should be the highlight. Seeing if services can post another hot back-to-back print, though markets are expecting it to weaken just a tad. Let's go to Jenny Horn. Let's talk some stocks here this morning and begin our conversation with the chips and the semiconductors with the host of Next Gen Investing. Jenny, something really interesting this year has been that Intel's performance seems to shine when the rest of the market is kind of struggling. And today we get another 2% bounce. The stock looking pretty good.
Stock is looking pretty good, and I will say that I feel like about a year ago, the narrative surrounding Intel was quite different. They were sort of like the David and Goliath with AMD. Now they've really come into their own and announcing some interesting news today, saying that they will plan this IPO programmable chip unit within the next 3 years. Shares are rising, like you said, as a result. So they will continue to support this business by maintaining that majority stake in the new formed company. But they said this will be coming now between the next 2 to 3 years. More of a long-term story, no doubt. But I think this is really interesting. This programmable solutions group will have its own balance sheet as it does head towards this quest for independence. We do know that Sandra Rivera will lead their broader data center and AI group. She will become their PSG CEO, which will then manufacture the group's overall chips. This move follows their spinoff of Mobileye just last year, which is its self-driving subsidiary, and continues under its strategy now under the CEO being Pat Gensingler to control some of their costs and focus on their overall foundry business and core processors in an effort really to catch up with a name like Taiwan Semi, for example. But Intel did acquire its overall FPGA business when it bought Altera back in 2015 for just shy of $17 billion. So now seeing this company going off on its own. Typically, Street really likes this breaking up of the businesses, at least as far as Intel goes. We do know that this was something that was applauded by Alibaba. They did a few months back. Obviously very different companies, but will be interesting to now see what this new company looks like. And of course, I think a way to capitalize capitalize on AI while also then sort of separating out some of your less profitable businesses, which Intel does have some parts of their business that they are still working on shoring up perhaps, but Street likes the fact that we could see this IPO spinoff as far as the programmable chip unit.
All right. And so far, generally, it seems like the financial re-engineering of the company and re-envisioning of the sections of the business have been well received by the market, and finally, also on the charts too. So Pat Gelsinger, I think at this point, deserves a little bit of credit for some of the strategy, and the market seems to be giving it to him. Shares still up, but kind of lost that fast bid to 2%, now up shy of 1%. Let's talk on Semi, which has been a huge winner over the past year in its connection to autos, coming off a little bit in an outright downgrade for this one.
Yeah, a downgrade, and this is pretty brutal because this price target also does imply, just less optimism than the rest of the street had been pricing in, frankly. So we did see the fact that BNP did downgrade shares to neutral from outperform. Neutral isn't exactly a bearish call by any means, but still, then with a price target that was also trimmed to $95 a share, that's down from $130. 95, only implies at this point around $7 of upside from where we're currently trading right now. Shares are lower off the open here. This name also, something that I always think is important to note, is they have seen their percentage of their overall float sold short increase pretty substantially over the last 30 days, showing that short selling, though, from a broader street perspective, we do have 20 buys, 10 holds, no underperforms, and no sells as far as I could see. And the average price target at $121 a share does imply around 35% upside to a name that's been, not necessarily like a huge outperformer on the year, but it's still seen some degree of resiliency. So 121 at the average puts in BMPs at 95 below that average very clearly. So just seeing perhaps this continued selling that could persist now into the back half of this year.
Okay. Yeah, if ON breaks down further from here, then you're going to be losing one of the big successful chip stories of the year for sure. So NVIDIA, once again, still the big winner of the group, and even some of the other real strong ones like ON softening up, down this morning again. Appreciate it, Jenny. Thank you very much. Let's bring in Jeff Pierce. Let's keep talking some notes out. And in Meta, I think we should start with the big cap, Jeff. Price target cuts, layoffs, more coming. But I don't know, layoffs have worked pretty great as it pertains to Facebook Meta's financial restructuring and year of efficiency.
Yeah, exactly. Year of efficiency. We've seen that work for the company so far. We are getting reports out of Reuters that Meta's planning to reduce their workforce again, though. The company is expected to do cuts from the Agile Silicon Team unit, which is part of the Reality Labs division. That unit's about 600 people. And if we don't yet know how many layoffs there will be, but this is likely coming from a couple places. This is the unit that develops those chips for augmented and virtual reality. And, reports have been that they just really haven't been able to make a competitive chip. And that's what we've seen. That's why we've seen Qualcomm come in and provide chips for their Quest and the Ray-Ban sunglasses as well. And then, as you pointed out, a year of efficiency is likely another reason for this. If they're able to find an area where they can cut some costs. Reality Labs, we know, is really the division that they're focusing on for the future. That's an area where, they lost about $13.7 billion in 2022 on just $2.16 billion of revenue. So that's an area where they are showing a lot of losses, and it's possible to cut some of that with layoffs.
Okay. So the cut coming with it, is that related, coincidence? It seems like the stock so far has given us no reason to think that layoffs are going to be a bad thing necessarily, that cleaning up the bottom line, no matter what it takes, is going to be a bad thing, because the chart still looks amazing considering everything that's happened the last couple of months. It's still off its July high like the broad market, but barely. We're talking $26, so a little less than 10% off its high. That's not bad, less than 8% actually.
Yeah, absolutely. What the company's been able to do in terms of cost reduction, in terms of seeing some of the ad revenue come back. And I think there is some excitement around their Quest headset, their Ray-Ban sunglasses as well. The price cut really did focus on expenses. JP Morgan lowered the price target to 400 from 425, kept that overweight rating on the shares. They said they remain positive Meta shares, but reduced their 2024 and 2025 earnings estimates primarily to account for increases in expenses. They said the biggest change in their model is they're increasing the 2024 total expenses from 93.4 billion to 97.5. They think Meta is going to guide in a range of 96 to 102 billion. They did say, typically Meta is not going to comment on their forward year revenue in conjunction with their forward year expense outlook, but they think it's important to come away from those Q3 earnings report with a view that revenue can grow faster than expenses.
All right. Okay, this morning doing all right. Big tech doing all right. Got Nvidia up, even with on down. You got Meta doing okay, even despite the cut. You got Microsoft up a good bit. Tesla too, we're looking at here. So trying to get a little bit of a dose of positivity here this morning. Maybe something from Boeing too that's positive. United's going to order 50 more Dreamliners.
That's right. We've got United ordering 50 more Dreamliners from Boeing. They also have another exercise option for an additional 50 as well. This brings them to 150 orders. United is now the largest Dreamliner order book on record, and they're positioned to become one of the largest of the 787 operators in the world. Included in that order as well, United also ordered about 60 of the Airbus A321neos, which expected to be delivered between 2028 and 2030. So that's 110 new orders that came out of United. The company, we know that they've secured more options for the Airbus planes as well.
Okay. Shares doing all right, hanging in there. Not like a huge response to this, but still rally after a couple rough weeks. I mean, Boeing really did soften up there pretty quickly post-earnings, gapped up and now slipping. I get generally the market has been weak too, but I'm kind of surprised that Boeing has broken down below a range that had $200 roughly at the bottom of that range. That was the case for the first 7 months of the year. And so I'm not really sure why this, maybe we attribute it to broad market, but it definitely has had a technical breakdown.
Yeah, I mean, certainly, the chart looks somewhat similar to some of the airlines that are out there. I mean, I'm a little bit surprised by it as well. I mean, with that last report with revenue up 19% year over year, but I think mainly that free cash flow going positive to about 2.58 billion from an outflow of about 182 million last time. That beat expectations. That's really the guidance that a lot of investors have been looking for. The company
Good morning.
For free cash
October
flow
4th,
of 3 to 5 billion.
2023. We're going to be streaming stocks, options, futures trading today. Pretty good morning, and you're ready for the day. Add your Wheaties and your hydration fluids. A good rest. Market opened about 10 minutes ago. We do have data coming out at 9:45, so be careful. And then at 10 also. ISM services at 10, factory orders at 10. 9:45 is final U.S. services PMI. So keep an eye out for that. But did just reject pre-market high. Try to put a line in there while it's still setting up. I didn't take any puts, but yeah. Could be a level to take puts on, especially with that inverse hammer handle there. But we'll wait for the data, see what we got. See if we break out of this range. The data could be the catalyst. Maybe open up a strangle for it. Full head and shoulders on the 1 minute. See if you can make this little inverse cup. Data in 1.5 minutes though. GME, a little gap up. Thanks guys for joining. Up, like up, comment down. Happy money sticks around. We'll be watching whatever comes around. Put a link for Discord and chat. Also a link for our Twitter in the description. Thank you guys for your, thank the 3 of you for your 3 likes. I appreciate it. Morning Bubba, morning Rally. Took today off for emergency. Without distractions. There you go, Celsius hitting hard. Let's see, Strangle. Yeah, I'm gonna do it. Open up a Strangle. See if this data moves. Pressing for the job. I like it, Bubba. $9.45. No reaction. Okay, I guess I'll wait for 10 o'clock. GME is flat, 1463. Below its supports. AMC is also flat, 85. Ruthless. Good morning. Market might be waiting on 10 o'clock, which will bring us factory orders and ISM services. A Jolt's job data was probably a bigger mover than these, but yeah. See, I mean, if it, of course, if it really goes outside of expectations, it'll be a bigger mover. That was part of the thing with the jobs data. It was far outside of expectations. About to get some spy puts. Data in 12 minutes. So either bearish on the data or yeah, careful. One would say that does look like a Head and Shoulders though. Okay, 10 minutes. Abuse you data. We have ISM. So we had 9:45. We had US services PMI. Then 10 we have factory orders and ISM services. Then Bowman speaking at 10:25 and Goolsby. I don't know if he's speaking at 10:30 or what, but. And I think that volatility yesterday might have been from Yellen. Heard she was talking. Might close my put down here. Kind of want to wait for this data though. Yeah, I'm gonna close my put there. Date? That's not necessarily that big of data, I don't think. Get a little bounce to VWAP, I can close this call. Close the call. was hoping that 9:45 data would move more. 10 might give us a good move though. Bouncing up out of there. What's up, V? Just 6 minutes here. Can't help but think an AMC calls would be good. I don't like confirmation of the break, but analysts with the Taylor Swift thing might be pretty significant revenue. You know, Aaron's going to be pumping it as soon as that thing gets released. We have this RSI divergence. The hourly that's set up. See if that holds. We'll need this RSI to come lower than it was back here, which would mean a break of this channel. That to not still be the case. Which we might. Got the 200-day moving average down there. A little gap too. All right, 2 minutes. Market is very slow this morning. Seems like it's waiting on this. I'll direct another 20% down. All right, Jack. I think the market's waiting on it also. There it is. Out. Oh. That goes pretty close to expectations with that move. Grab some puts. Very tight range still. Over the day test. Wondering if it wants to bounce off that 200 day today before we get our bigger bounce. There's a new low. Close a little bit if we hit the bottom of this channel. This buy is now red. Close one there. Nice, Hamza. Well done. Morning. Profits on Tesla to the long side. Wow, yeah, Tesla's up 2%. Bad. AMC is green a little bit. Gonna stop on the rest of these. Break even. Goog candle. Google. Daily. Pretty early to be calling daily candles, but yeah, I see it. I'm gonna stop looking at the 9. No bounce there on SPY. See if it rejects low of the day. Flips it to resistance. Like it did just there. Got 420.79 is one of yesterday's lows. Then 420.30. And this is the bottom of that channel. And we've got the 200 moving average down here, 416.46. GME, new lows down 0.5%, 14.52. Monday's closed because of, it says Columbus Day. I think that was Columbus Day. Well, all right then. I'm on vacation. Good thing my wife didn't hear that. On vacation. That'd be fun. New low there on SPY, down 0.11%. I don't like how the channels move depending on the time frame. That doesn't make another put there. Or will I? I'll just let these ride. Good. First little support I see, and we haven't gotten to it yet. Talking about the daily candle, Hamza? Daily candle is susceptible to change. Very lightly entering 418s. Wow, out the money. Those dailies? It's crazy. I have 422s. I got it when it's at 422, but still. Daily. Hope they print for you, because my 22s are like that very much. Unless I can stop at them first. Little VWAP test. VWAP would probably stop me out on these. Get back in. Nice, you well done, man. I'm just hoping VWAP's low enough so when it tests it, it won't stop me. By the time it gets there. That's a tear tomorrow. Maybe. We could have our big bounce before we even test it. Might not test on the next leg down after we get a bounce and fill some gaps, right? I'll have to fully test it this run. But I agree, it looks like it might want to test it today and then begin the ascension. That'd be a pretty big day. 416, 46. Oh, about to get stopped. Will it hold? go to my backup account already. That's too soon. Oh yeah, she's bouncing. Yeah, I stopped out. Bugger, should have closed more. I think it's because this account. That's so messed up in my head. Gotta take more profits. I don't want to because my buying power. Broken psychology. Is Fidelity broken? Fidelity. What are you doing? Yep, right on my stop. Ah. I got back into one of them. I was out of buying power for more. Dang it. Literally right at my stop. They're taking it off, I guess. Shut up, Breedless. And Faye's $100 put. I don't know who you are, Hamza, but I like how you're calling stuff out. Like Bear is literally right on like one of these wicks. Just enough. Just the velocity of this rally that really killed the premium because I bought him up here. Kind of want to retest on this channel before I get more. The backup. Now we wait. Sort of volatile. Starting to flush there. Breaking that channel at least. Let's see. AMC's coming down. GME's down almost 1%.
Yeah, you know what? I think what you've seen is in the second half of the year, really since June 30th, the global oil market's been undersupplied. So you've seen global oil inventories decline. So you saw really strong.
Didn't really get a good chance to reload.
In the third
Guess
quarter.
I could do some here.
Seen a little bit of a pullback, obviously, here to start the fourth quarter.
Break that channel.
You know what to read into it? It's still undersupplied, but I think now what investors' concern is are we in a global recession?
Oh wait, I still have that put on
the
the
in a U.S. recession? And when that happens, oil demand declines, and so I think that's
liquor's
really,
up 8%.
At least in the last couple of days. You know, the fact that we potentially are on the brink or in the midst of a recession is
Wait for that to
overtaking
turn
the fact
around.
that the global oil market is still undersupplied, and inventories are still going to fall really through the end of the 2023.
This morning we printed a pretty solid ISM services again. At least that side
There's
of
new
our
low on
economy seems
supply.
to be a rock. Employment doing all right too. The supply constraints, to your point, are a good salient explanation for
All right, then.
at least a good chunk of the crude rally. But is it still impressive
Which
that
channel we
got
hold?
WTI back to $90 when China was backed into a wall economically? I mean, throughout that rally, everyone was talking about how soft China was. How do you think that plays into this, if there could be maybe a return to form of that economy?
Yeah, well, China's obviously the world's second largest economy, and you're right. Oil demand in China has been slow.
There's a bounce
to
on
return,
yesterday's low.
but it seems to be coming back. If you look at just really demand around the world, it seems to be rising as well. That's noted by the fact that U.S. exports of crude oil have continued to be fairly steady and fairly high, which is really, from my perspective, an indicator of strong global demand.
And how it dropped to
for oil
419.
globally. You've continued to see increases in demand for crude oil this year, and so if China comes back
And phase closes under 120 and get 110 puts. So far, so good. Nice. Well done, Hamza. We'd have a plan, stick to it.
We don't want oil prices going too high because that could potentially cause inflation concerns. Obviously, get the Fed excited again
This
about
one isn't valid?
raise rates, slow the economy
Which one?
down. We'd rather just continue to see
One pinned in
demand
chat?
and the global economy prosper, and we don't necessarily need $100 oil to be successful investing in energy stocks.
True. Tell me about what makes each company different or appealing for the ones that you like. I mean, should we just buy XLE? Should we just buy a section? We've got ETFs for refiners, for upstream, for downstream.
That doesn't work?
What's the approach?
Yeah, well, I think it's really individual stock selection is something that I think is really important. If you're an investor just looking at the S&P 500, you say where should I look in energy? You look at a company like ONEOK Energy. OKE is the stock ticker. It's a 6.2% dividend yield, so one of the highest dividend yields in the S&P 500. At Tortoise, we just think dividend yield is really important. Free cash flow is going to be really important to investors. It's visible, it's tangible, it's right there. If you think about ONEOK, it's paid a dividend for 25 years. It'll continue to pay a dividend and probably increase that dividend over the next decade. So you look at that and you say, okay, well, how's its value? Well, that particular stock is trading at a multiple that's cheaper than the S&P 500, whether you measure it from an EPS perspective or an enterprise value to EBITDA perspective. So the dividend yield is one that we really like, and so a company like ONEOK fits that mold. If you want to play higher oil prices, company like Pioneer Natural Resources is a classic example. It's one of the largest producers of crude oil in the Permian Basin, and as all your everyone knows, the Permian Basin was one of the leading U.S. basins, and frankly in the world and in the U.S. And the Pioneer basically has a variable dividend, so its dividend's going to go up this quarter because of the higher oil prices that we experienced last quarter. So those are the type of names that we like. The last one we really like is Energy Transfer. It's an MLP, but it trades at a 9% dividend yield. It's a investment grade rated company. You can't find a lot of investment grade rated companies with 9% dividend yield that's grown its dividend and continues to grow its dividend. So anyway, we like those attractive stories.
Massive dividend yield.
That's sketchy.
That's a massive dividend yield in the case of Energy Transfer. And are they
AMC down
still growing
1%.
on the top line?
Bottom of that wedge.
Oh yeah. Yeah, they've grown the
Which
dividend
way you
30%
gonna go?
this year now, and they'll grow the dividend next year. It won't be 30%, but they can easily just grow the dividend 5% next year, and that will be driven by continued increases in free cash flow from the company. So it's an energy infrastructure company, right? So that's why I go back to as an energy investor, I don't necessarily want $100 crude oil. I'd rather have oil stay right where it is in the 80s, frankly, because that's going to continue to drive demand for all energy commodities and help these companies that I'm talking about.
Yeah, and probably makes it a little
Almond's
bit
right now?
easier too, right? It's like sometimes you're playing poker. You just want to make easy decisions. You
Doesn't
don't
valid?
have to
That's weird.
make extremely
Other one in
hard
the
ones.
description.
When crude oil's going up 20% down.
Maybe you need to like
20%,
log in or something.
makes it very
Too low there
tough
on
to know
SPY.
if you have to get in and out. Whereas
Barbecue
if it's
is
stable,
not trading right
you
now.
just collect the dividend.
So
and try and avoid the
basically all of
companies
its
that have
assets other than the
major,
NOLs
risk,
have been
existential
liquidated.
risk or credit risk, and as long
And
as
those
you
that
don't
held shares
have
before
those,
it got
and if the
delisted
market is buckling 'cause of
are
higher
holding of a shell
rates and the
company
alternative, seems like
in
your
hopes
dividend
of
payout for energy stocks is a huge boon right now,
a new company
regardless of the crude oil moves.
taking it over for the NOLs
Now,
and
that's a great observation.
IPOing
You're
it or
right.
SPACing it or
here's- the
basically
energy sector, I
reverse
think, maybe
merging
over the
or
last
however they're
couple
going to do
years
it
has been one that
and
investors have
bringing the
traded,
shareholders along
not
with them
invested in, right? They've been in and out, and you're right.
and
Look
shares
at
of that
all
new
the factors
company
you laid out very well.
so that that new
If
company
you
can
look at the
take
next
advantage of the
decade,
NOLs.
It's going to be a decade of dividends for the energy sector. There's a
It's actually
lot
seeming
of free cash
kind of
flow in
likely.
this sector. I think the energy sector's 5 or 6%, the S&P 500. It's probably going to rise in
So yeah,
terms of its
it
percentage.
seemed more
I mean,
likely
if
in
you
the
think
last
about
couple
the
weeks.
essential nature of it, we all need energy. We're all going to use energy. We're all going to continue to use oil and natural gas and other forms of energy. And clean energy will increase as well, but oil and gas are going to be the predominant form of energy used globally for the next decade. And these companies are going to generate a lot of free cash flow, and they're going to pay it back to shareholders in the forms of higher dividends and stock buybacks. And so that's why I think the sector can become more investable, or has become more investable, because of this discipline that's happening in the sector, and investors can now own it rather than just trade it.
Well argued, Rob. Thanks for the conversation. Much appreciated.
Thank you.
And always like the stock picks too. All right. Especially the massive dividend in Energy Transfer. Wow. All
Okay,
right,
looks like
when
we're
we
going to get
come
back to that 420 level.
Let's get some charts ahead of
And stop out of all my
It's
puts.
a busy week for the consumer, especially when it comes to drinking and some eating. Talk Pepsi, tap when we come back.
The heck? Oh, that was that one. Grab this one. broke up out of that channel, maybe. Yep, it did. You see these bottoms aren't as steep. If these, then you have this bottom that's less aggressive. And this should really be like here. Now you can see what I'm talking about. If we reject this, top of this channel. Otherwise, calls are in place. So I might be getting some more puts at the top of this channel, and then just have a pretty tight stop with a break on it. Yeah. What's up, guts? People's UI is bad. What are you comparing it to? Nobody can buy or sell shares, that's correct. I mean, you might be able to, they're basically, yeah, I don't think you can sell. There's no market for them. They're basically holding shares of a private shell company, I think, more or less at this point. AMC bouncing off the bottom of that wedge. Could have taken off that last put on that account, but I'm sour because I got stopped out here on my puts, so didn't do it. UOP is lining up perfectly with the top of that channel. What do you know? Oh, there's a break of VWAP. Break of the channel. See if that's fake. Grab some puts. It doesn't look fake. It doesn't look fake. Alright, I look for a pullback and hop out, get calls. Unless it is fake. It's a fake. That level. We could just chop around for a bit too. Just VWAP. The VWAP chop. Helped out. Hold these puts for a little bit. Closing them. I'm closing them. Getting calls. And we could chop around for a bit to give this VWAP, but let's see. This was pretty quick. Did a whole lot of pullbacks on that rip through that channel. Could be kind of rejecting that horizontal resistance too. From who knows? The valves. Running GME's green. And flat. Buy back down to VWAP. See if this happened later in the day, I would be more prepared. That tapering bottom. Started scaling into calls. It happened so early this morning and so quickly. Still holding my puts. Good job. Alright, I'm getting more calls there. On the break. Break. Close summit high of the day. Would have completed a cut by then. Unless we just start chopping. 1040. Can do it.
And unfortunately, Oliver, we had to actually pull back on a 15-year weekly chart in order to get some areas to be able to provide as far as support and resistance. Point B, we can see further weakness when it comes to this chart. We can see that all the way down to $19.50. That's where the point of control is. That's where we did see some demand when it came to the stock. Would not be surprising if we actually touch that level in the next couple of, or maybe 6 months, or maybe even 12 months. And last but not least, RSI is showing, obviously it's really bearish at this point, actually probably the most bearish that it's been on this chart. And it actually can stay and remain at this level for a long period of time. And you also are looking at the stochastics hitting a bearish level. That is not turning as of yet. You don't want to get ahead of a freight train. And this one right now does appear that the momentum is still to the downside and may have a lot more room to go.
All right. ConAgra looking dicey. Never a good sign when you got to zoom out 15 years to see something positive. Thanks, Kevin Green, for the charts. Nice look there. Thanks, Renita, for the analysis. When we come back, we still got some stock specifics. And by the way, the equity market is firming up. So we'll discuss it in our meetup panel as stocks are able to stay strong thanks to big tech and thanks to the NASDAQ.
I like that little head and shoulders up there. Oi. Ugly chop. Maybe find some liquidity on this shoulder over here.
Their choice to consumers in the third quarter, with growth coming from their gas engine, electric, hybrid, and commercial van lineup. We did see, shares are trading pretty much at a 1-month low earlier today. We did also see a 4-day losing streak, so Ford needed some good news. I guess today's, though, not enough to move the needle overall. Their F-Series sales did rise around 13.4% to 190,000 roughly, while sales of their electric F-150 Lightning, which which has been a pain point for them, getting that production on par with the rest of their F-Series. That tumbled around 46% year over year. So far this year, they've sold around 573,000 F-Series trucks, including just around 200 of their F-150 Lightning series. Sales of their Transit van did rise 23%, and we have seen also the fact that their hybrid sales jumped 41.4%. So perhaps that middle ground between not fully electric while also still being a little bit more fuel efficient to cut back on some of these rising fuel costs, which are affecting, I mean, frankly, the prices at the pump, and also just, you know, right now, the overall, I'd say, market sentiment regarding some of these different transportation stocks. So
that's what I'm saying. This was a weak move
for interesting numbers.
bulls.
Good
It
to see
looked
that growth, but not enough to move
you can't
the
just go
needle here
straight up
overall.
like that. You got to build some liquidity,
and
build some
Ford
strength.
now dropping
They're
to
open Bears
lows, while
rallying it
Tesla
up.
is firming despite some disappointment
Get
in
a
their
little
deliveries.
reverse head and
this
shoulders
week.
here.
Market showing a lot of favoritism towards Tesla in that case.
Start with that head and shoulders up there too. Dang it.
Sell on the Tesla deliveries. It didn't move through it, and we continue to squeeze that long-term chart of Tesla to $250. All right, thanks, Jenny. Market doesn't want to touch the legacy automakers still. Ford down this morning.
Well, the same when he stopped
softening
out.
up over the last 5 days.
That's
Let's
a good
talk
play.
about the overall picture with George Tillis and Scott Durfee. Still have the NASDAQ up this morning. George is our senior markets correspondent. Scott's senior manager at Trading and Education out in Salt Lake, the duo. Good to see you this weekend, Mr. Durfee. George Tillis, good to see you as always on the line. All right, Scott, get us started here. Stock's trying to hang in there. I mean, how do you think we're looking right now? We got enough in the big cap world, it seems, to give us a little breathing room.
Yeah, that's true. But in the small cap world, we're not looking so great, right? I mean, we've got some headwinds. We've even got some crosswinds. I mean, we've got, you know, with data still coming out. I mean, the data that's come out today, you know, somewhat benign. I don't really pay that much attention to the ADP numbers. They're rarely in line with the final.
I saw the head and shoulders, but being above VWAP,
giving
more conviction to the upside.
You know,
Not
we
a
still
flush
have
down
a
here.
looming ousting potentially of Kevin McCarthy in the Senate.
We test this bottom channel and reload on my calls. Hopefully get a bounce to get out of them.
With that.
We're not
We've
still
also
headed
got
up.
a lot of other data coming out from Fed speakers throughout the rest of this week.
But
And
this is
so,
looking very
you
choppy
know, we're
today.
seeing a regional banks index, for example, KRX, that dropped over 2% to a 2-month low yesterday, and is still kind of falling today. So, you know, we're going to have to wait and see. Headwinds are real. Headwinds are prevalent right now. We're just going to wait and see how that all pans out. But as of right now, I'm not feeling much tailwind in terms of helping the bulls, Oliver.
Hey, the dollar is about to go positive, it looks like. That's usually in that.
It's because they're more debt laden versus the larger caps. And at the same time, you know, looking at the Russell 2000, a great percentage of those companies aren't EBITDA positive. So I think that's going to pose some challenges for growth versus value. I think the mega caps, from a technology standpoint, I call them the mega monopolies. They're probably going to come in, you know, at or above expectations on earnings. So I think that's going to be supportive of their equities, at least going forward. But I don't like what's going on in Washington right now. My tone has changed a little bit because if we see some impasse with the budget, we had the reconciliation in place for 6 weeks. We may end up seeing a shutdown in mid-November. So I think that puts us off a little bit because we have obviously some hawkishness from the Fed, monetary restraint. If we have fiscal restraint, I suggest it's not going to be good. And I think that the markets are going to be rather volatile because of that going into the next 6 weeks or so.
Okay. Our dollar still hanging on, though. I mean, if the government were going to cease functioning, I would think the dollar would be going down. Would it not, George? I mean, if things are going to hell in a handbasket and we weren't going to be able to pass budgets and all that stuff?
No, I think it's a place where people will go into from an international standpoint because it'll probably create some volatility in other asset classes. It could create volatility in bonds and stocks. So I think at the end of the day, you know, I'm not looking at the strength of the dollar or weakness of the dollar because of government dysfunction. I'm just looking at it as a function of, hey, if there's instability across the rest of the world, I think higher interest rates is creating some of that instability behind the scenes.
Function, I mean, where does that go into the discounted cash flow model? I don't know if it does.
Yeah, I don't know either. But I do know this. I know that a confused mind tends to do nothing, right? And that's what we're seeing. We're seeing a whole lot of confusion, not just in the market, but primarily with investors. I mean, typically, we have an A plus B equals C scenario, and and there's some variableness in all of that, sure. But
yeah, broke through that dollar support, so
being able to have any sense of normalcy because of the confusion that's happening, that I'm just
horizontal
afraid
support
that,
kind of right there where it
I'm with
bounced.
George. I don't like what's happening in Washington, D.C. The market doesn't either. If anything, the market hates confusion, and we're seeing that right now. So, nimble. I mean, I go back to that time and time again, but we need to be nimble.
66 cents for the next
heard
support.
Also that gridlock is good. That was an adage they used to say back in the day. The last pre-COVID era when things like this move the needle. Gridlock is good. George, you think there's any truth to that, or have we outgrown that adage when the economy is so used to regular fiscal support coming from policymakers?
Well, I think in historical precedents, if you look at in the past, yeah, gridlock is good because in the past we had monetary capabilities to, of course, ease monetary policy. That's gone. So I think that this is a problem now because we don't have the other conduit for.
Spotify wants to come down further.
They're going to keep rates where they're at, or if not, increase them. So we basically have two policy fronts, two mainstay policies from an economic macro standpoint that are restrictive, and that's not good.
All right. Yeah, I think that's a good point. And when you have the Fed limited in their abilities right now, gridlock may indeed be bad. Thanks for the thoughts, guys. Good stuff. Scott Derby, George Tillis.
I want to close calls at the low here, the bottom.
This morning.
But I could flush, break this channel.
Trading 360 with Nicole Petalides is up next.
Pick back up
we'll see you this afternoon for Market on Close.
Steeper channel.
Joining MTL.
Looks like it's doing that. I guess I could get puts. Just don't like the chop. Thanks, Ruthless. There it is. There she is. AMC showed support in the bottom of that wedge. Break this channel, I'm gonna get some more calls, hopefully averaging enough to be able to exit them profitably if we are still in the downtrend. Or I might get some at the bottom of this channel. Either way. Uh-oh, Bubba's getting puts. There's a nice little head and shoulders there, to admit. There's a little flushy on SPY. Not really though. Not yet. Yeah, last 30 minutes is a pretty big wick there. The breakout. It's breakout. Earned by the breakout again. Just stop trading the breakout. Gonna be too fast to get your stops in there. It's a false breakout. Just average into some calls there. Maybe closing some there. If we get a push back to VWAP. Way to go, Bubba. Hey, stop yourself out. What's up, Valves? Buy now green. So choppy. Closing some more there. Closing the rest there. Oh, never mind. That's not the rest. It is the rest. Look for puts. Very choppy though. So far. GME, AMC are both green. It's way back up to VWAP.
Very fast pace, along with the same thing with the dollar. Those two factors have been happening in very obvious fashion over the last 2-3 months as the S&P has rolled over. So I think all that together works. And again, these are two major drivers that we just saw from last year. And from an economic standpoint, everyone gets hurt, if you're with a higher rate environment. And again, I would just say not only where the level is the pace of getting there. And it's been really very consistent and very strong as well. So I think, the market can eventually understand what higher rates are if it just normalizes how we get to that point, right? And so we saw that really at the beginning of this year where, we're coming off really higher rates. We're kind of hovering, right, between, say, 4.2 and in the high threes for a while there. and the market was okay with it. It's only since April or May when things really took off again. And really, I would just say the path being so quick is what's really hit the market right now.
Right, and I know you were watching XLU. I'm out of time. Can you give me 10 seconds on the utilities?
Just another indication of how something moves according to rates. So yesterday we saw the big positive reversal as the rates were going higher. You need some follow through. And if you see a bid in the XLU, maybe indication that traders are thinking that rates actually are going to roll over sometime soon.
Frank Capillari.
We'll hold the calls a little longer. Oh well.
Thanks for being with us. Thanks, Frank. Still ahead, the big three stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals.
Lichtenstein.
Don standing by, and he has the trades. He's going to look at XLU, NVIDIA, and emerging markets. Coming up.
Hey. Whipsaw today. The RSI divergence is still there. That's why I'm bullish as well. Getting some puts there. Now 11:15. 15 minutes to you close. We'll get some more puts for you to test on the top of this channel.
saying is that we could see a little bit more of
Liechtenstein.
range-bound trades start to play out, and some of the selling we've seen as of recent maybe just has or will start to slow, and some of that vertical type price activity we've seen is going to transition to a more horizontal fade in that phase, and that feeds directly into what I'm seeing in terms of price activity. First and foremost, though, a $10 move to the downside, and you can see that XLU has come off. We were basically the highs of last week up around 64. You can see recently to down around, well, just below 55. We'll call it 54 just to keep that nice $10 round level here. But not only do you see a top left corner to bottom right corner pattern playing out, you're also seeing zero rejection of this lower level as of yet. So these are areas of consolidation that are formed. You can see the two phases of development where we go from that horizontal to the vertical, and then again kind of wash, rinse, repeat. And along the way you get a, well, in this case, trend to the downside. It's pretty easily identifiable. Currently balancing around this 56 level. The bears don't necessarily want to see it above 59. That would bring that working assumption that we're forming value at lower and lower levels into question. Now, I want to point to how the weakness we're seeing here that Don was talking about, it's not just since last week's highs of around 64. Taking a look at the move we've seen since September when we topped out up around 65. And again, just these well-defined areas of consolidation that formed at lower and lower levels. And I just really want to speak to this area of the chart here where you see this breakout out of the balance phase that we were forming around 59. High conviction of the downside, lower lows, lower highs, that vertical phase, and then you see how it transitions again into this sideways phase. Now we're looking at 5-minute candles here, right? So let's not get too focused on this. Let's take a step back. In fact, I want to show you what's going on as we look at the daily time frame, because in that vertical phase, eventually you find a stopping price where the market gets a little bit more rotational and horizontal. Nicole, that's exactly what Don's looking for right now. We have gone from, again, this horizontal phase around 63.
Like a little more.
High conviction vertical phase to the downside. Don's looking
There's
for
a
something
break of that channel.
rotational, a little bit more sideways now.
Right, understood. And so that's the whole thing. You know, when you think about it being oversold, we were just talking about that with Frank Capillari. I mean, it really has been a standout. Any final thoughts here on XLU? We know you're not really turning bullish, Don.
No, I'm definitely not. I'm not ready to go to that extent of being bullish. But look, I'll always take an opportunity when an opportunity presents itself. In this particular case, look, that XLU trade is much more about bond prices. And, you know, on that point, bonds right now are not about rates. It's about bonds. It's about price. And there's a lot of risk managers looking at the ZB day to day going like, wow, 111. A lot of huge firms massively long that bond market to produce some yield over the last couple of years. And now they're stuck in this horrendous trade. Again, look for some short covering at some point in the bond market, which will probably
come out more now. Would have been green on those calls.
XLU.
What a choppy mess, man.
Next up, you have NVIDIA, which actually got some positive comments yesterday from the analysts. They still see upside potential for this winter. What are you thinking here at 438 today?
All right, so NVIDIA comes all down to the fact that overall, the Magnificent Seven, they've just been unscathed in some of the sell-side activity. I mean, yeah, you've scratched the surface, maybe some selling inside of Microsoft, little sell-side activity inside of Apple, but NVIDIA, overall, it hasn't even really scratched the surface over here. And I think that overwhelmingly makes me bearish inside of the S&Ps as well. Nevertheless, the opportunity right now is not necessarily, you know, that short position in the S&Ps, and it's to look at underlyings like NVIDIA and say like, well, if you're bearish in the S&Ps, okay, that price action in the S&Ps, if they're going to come down, is going to be on NVIDIA's shoulders. And for that, here's the trade I've got set up. This is all the way out to the DC15 expiration, okay? I'm selecting a little bit more duration in here because it's a big downside spread. So I'm going to be buying the 405.
Probably added my puts at a high day.
405 puts, selling the 395 puts. So it's this $10 wide spread, which is out of the money on the put side. It's done for a $3.55 debit. Again, NVIDIA breaking through that 400 level is just effectively a start. But in a time right now, we're seeing volatility inside of the S&Ps, look to areas that are unscathed. Big tech, again, just scratching the surface of that sell side.
Right, understood. So when you look at that, what do you think, Ben? Is this decent ideas in trading?
I think it's a bit premature, Nicole. Unscathed to this point, as Don pointed to, and still no indication based on the technicals that we're seeing any rejection of this upper level. I think as I look at this chart, the one thing that I could maybe kind of hang my hat on is the possibility of a head and shoulders pattern starting to play out here, as you could maybe establish a bit of an argument that we're seeing a little bit of, again, maybe a topping pattern as we roll over. But I don't think until we take out the lows that we saw back in August down around 390, or even going back to the lows that we saw back in the earlier part of this summer down around that 360, 370 level, do the bulls have to be concerned here? And as you look at this chart, what I went ahead and did is just identified a few areas, areas of consolidation that have formed, because I want you to see, looking again at this hourly candle chart, you see that we are actually below the balance area, consolidation area around that 45 pivotal point right now, but nothing to get too concerned about, right? You can see the key lows here that we identified, and as long as we hold above 390, while it is a significant move to the downside before that would invalidate this working assumption that we're trending higher, that's really the next line in the sand for the bulls. Unfortunately, when you live by the sword, you die by the sword with NVIDIA. But taking a look here, because the bulls have been living by this one, and it's been sharp, this move to the upside, to say the least. 127, 159 to begin the year. You can see these areas of consolidation that formed, and again, we're looking at currently balancing around 455. The bulls, again, don't want to see it below 390. I did show you, based on another chart here, as
I'll hit this high.
I don't know about
not really a full cup yet,
because we've definitely lost some of the momentum to the upside, but still holding above the 200-day moving average, like the NASDAQ is.
Today's
S&P
actually
still above that
very
level
choppy.
as well. But again, below the 50-day moving average, but strong and really just below it right now relative to what we're seeing in the broader market, whether you're talking
I whipsawed pretty bad also.
Russell. I mean, I guess NVIDIA has been pretty much holding in there pretty well. And again, from what I'm
start
seeing,
with this
just kind of balancing.
breakout.
No indication that we're rejecting
False breakout.
Okay. Don, any final thoughts on NVIDIA before we get to emerging markets?
Yeah, NVIDIA is really the linchpin inside of the S&Ps right now. It alone actually holds the keys. If it sells off, the S&Ps are going to get really decimated. I mean, again, when you're looking at gains of this magnitude,
I mean, look at this. It's just,
if you look at NVIDIA, how much of the gains in the S&Ps are reliant upon NVIDIA is absolutely critical into the end of the year.
Yeah, that's what we were talking about. I mean, when you look at tech and tech sitting on these key support levels, if tech falls and NVIDIA and some of these other names, that'll bring down the entire market, which already has been faltering for August, September, and now October. How about emerging markets? What do you see there, Don?
All right, emerging markets, EEM. Here's another one where Ben, ease off, man, because this is another bullish trade. I know it's a rare occasion, but this is, again, horrendous sell-side activity. And what you have inside of EEM is maybe a little bit of basis support coming right around the 37 mark. But overall, inside of emerging markets, I think it has a tremendous amount to do with the U.S. dollar. I mean, the U.S. dollar has just been ripping one direction. Now, as Ben is going to point out, I'm very early. I like to be early. I like to be the first one through the wall. But if the U.S. dollar is to reverse at all, even a flinch, if you will, to the downside, I think EEM could actually sustain some big upward momentum. As
Is the
such,
handle?
again, this is
Might
what I
be.
kind of term those bounce and fade trades. For a bounce inside of emerging markets, the trade over here, a little bit different. I'm actually going to do a call ratio back spread. Why? Because I'm looking for
Call ratio back
either
spread.
a really explosive move to the upside, or maybe EEM continues to fall. Either way, this back spread actually plays very nicely.
First line again be a
This
lower
is
low.
a November
This line?
17th expiration. I'm going to be selling one. Again, just selling one of the 37.5 calls, buying two of the 39 calls. So again, sell one, buy two. 37.5 calls, selling one.
If it can't make a
buying two
full
of the
cup, that's
39
not
calls.
bullish,
This one
meaning
is
it's
actually
we're
done
still in a
at
selling
25
pattern,
cent
basically.
credit.
So far, it's
even
not made the
if
full
EM
cup.
falls, well below the 37.5,
Oh, it still looks
we
bearish
get
to me.
the 25 cent credit. If it explodes, on the scene higher, we're going to be just fine. There is absolutely risk, though, between the short strikes of this particular trade.
Right. Okay. This is the last one, Ben. EEM, please.
Well, Don's right. In terms of the trend we're seeing to the downside, pretty well defined behind me, right? Top left to bottom right. I'm a little bit confused in terms of Don's take on this one, but I do understand when we get into the bigger picture why, as far as similar to what we were talking about earlier, how we could start to see some rotational price activity around this $39 level. So I like the fact that he's dialed in on that $37, $38, $39, $40 level. Let's just begin first and foremost with the hourly candles. This chart here going back to levels when we were up around the $42 level. You can see areas of consolidation
retested that breakout
at lower and lower levels. And again, this is going back
could
to
you still
the
be
end of
climbing up to make the full
July.
cup
What
though?
I'm noticing is the fact that we are currently in a vertical phase to the downside. As you can see, we have exhibited some high conviction breaking out of the balance that we were in around this $59 level, and that's in line with the trend that we've been seeing to the downside. So right now we're looking for at some point something to become a little bit more rotational and overlapping and more horizontal than this high conviction vertical phase, this breakout that we're seeing. Let's move away from this 1 hour candle chart here and take a look here at the daily candle chart, because speaking of a trend, I mean, this is where it's really easily identifiable. You can also see how on the bigger picture, that vertical phase that we're in on the hourly candle chart, well, really not as much so. When
You close in
look
4
at
minutes,
where we are
getting
off
up
the
to the
lows
chop
from last
hours as
fall,
well.
right? Kind of right in the middle of the
Today
range,
wasn't already
coming off those
choppy
lows
enough.
from around 34, spiking
Maybe we'll
up
get
to,
some
again,
continuation in the middle of the day.
$43 level.
Yesterday.
I think it's key, though, in that spike up. Look where we held below, right? We always talk about referencing the middle of, or that key area associated with the prior area balance relative to the
We
one
had
that we're forming. And
bearish.
like clockwork, again, we held below.
We had actually that
43
steeper
because we're
trend, which
trending lower,
it
simply
erased,
put.
but
Values moving
then we
lower,
had this less
and the
steep
areas
trend,
that are established
which
on
is
the way down
going
are
side of the
gonna be
reversal. But then you had this
honored as we
big
do,
pump fake,
establish them and
for the reversal,
continue to. So the one
which
thing
is
I
what
did
screwed
notice,
everything
though,
up.
again, in terms of that bullish narrative, as you take a look
Because
here,
this was anticipated, but it didn't build any liquidity, so it just did it and then came back and then built it. And now we're doing that bullish move. So is it actually a bullish move?
On this bigger picture
Yet to be
sense,
seen.
but you can see on that daily time frame and also on the hourly
You see a
candles
cup
very
complete.
well, and no rejection of that working assumption that we're
Otherwise,
trending
it's
lower.
not.
Yeah, okay. Look,
But the break on this channel and then a retest.
down to the
This is still
right.
bullish.
What do you think? Final quick thought here, Don Kaufman.
Yeah, overall, I'm short-term looking for a bounce inside of the marketplace, but nevertheless, still bearish overall into this last quarter of the year. Look specifically at side of tech and its reaction, obviously, to the bond route.
Right.
I grab some more puts, but I've been getting whipsawed today too. So
And then just keep going the same way. Don Kaufman, Theo Trade, Ben Lichtenstein.
trying to at
on the
least
charts. Thank you both for
get
the
puts
big
at highs and calls at
read
lows.
today. All right, we're going to
It's just a
spotlight
chop and
TEMA ETF.
potentially range bound
And
today.
Kevin Green is standing by, isn't obviously some details on Intel. Also talking about the airlines. Plenty more here on Trading 360.
Maybe a little double top here. Let's see.
That they plan on spinning off their programmable solutions group unit in the next 2 to 3 years here. We did see a brief pop to around 2 to 3% early in the session, but we are seeing that fade here. Now, this is going to be, once again, something that takes a little bit of time to be able to bring to market, but it also reinforces Intel's vision on trying to focus on core processors. That has been a key area that they've been trying to highlight for investors, even after they kind of spun off their Mobileye business here. Now, one thing to note that this company, or this unit here, actually focuses on these
Dish broke the
field
$5
programmable
level.
gate
Wow.
arrays, or they're called
Sucks.
FPGAs. And even though they're a little bit more basic than some of the other semiconductors that are out there, or electrical components that are out there, they are actually very versatile when you're looking at the industries that utilize them, from data centers to aviation and so on. So I think this is actually a very interesting story, to say the least. Nicole, it's actually kind of, I'm kind of scratching my head a little bit, because it seems like it's this pre-announcement is a little bit far ahead of itself. Usually we don't see these type of announcements until about 6 months leading up to the actual event. So maybe they want to be able to get in front of investors right now and make sure that their price is, that their stock is accurately priced for this eventual spinoff.
Yeah, interesting. I mean, sometimes people know things and it's priced in, but this gives them at least some transparency about what the plan is going forward. Then we have some of the airlines and getting some price cuts there over at Citi on the airlines. Tell us about that, Kevin.
Yeah, we are seeing Citi pretty much downgrading all of the major airline companies when it comes to their price targets here, but they do have a little bit more of an optimistic tone when it comes to a couple of the airlines here. First and foremost, let's talk about United Airlines. They actually lowered their price target to $75, and that's down from $84 here, and they still have their buy rating on the shares. They're just a little bit uncomfortable and have a little bit of skepticism when it comes to high oil prices, as well as softening U.S. and China economies, and with the stronger dollar, it does not really pair well when it comes to future profitability for the airline companies as a whole. And they do believe that the economic mismatch will actually continue until early 2024. But they also believe that out of the big four, Delta and United appear to be the strongest. They also reduced the price target on Delta to $56, and that's from $64. But we are seeing all of the airlines actually in the green today, and those that they actually they have lower ratings on, when you're looking at the equity ratings, they actually are popping a little bit better and doing a little bit better than some of the outperformers that they see in their eyes.
Okay, good. Thank you so much for showing all of those. Appreciate it. Kevin Green, good to see you, Senior Markets Correspondent. All right, let's focus on the ETF space, specifically TIMA ETFs. And joining me right here live at the NYSE is Moritz Pott, CEO, TIMA ETFs. Thank you so much for being with us. You have a variety of ETFs. You are the CEO. Tell us a little bit about the different types of ETFs that you're focusing on.
Yeah, so we are the first independent active ETF manager focused on institutional clients. And we have a range of ETFs, some on the more defensive end and others on the more growth end. So on the defensive end, we have the first reshoring ETF in the United States. We have the first monopolies and oligopolies ETF focused really on deep moat businesses. On the growth side, we did the first oncology ETF, which we believe is the fastest growing, most compelling part of the overall biotech space, but also the first luxury ETF. Luxury is going for an interesting time. It's been a sell-off for the
ANC. So the ticker symbols are pretty easy to understand, and folks can look at those for growth. When you look at the balance, let's start with growth. I mean, what do you envision for these ETFs? What kind of growth do you expect for them?
Yeah, so we are focusing on those they have, and ultimately in themes that people can relate to, that we manage professionally in-house with a focus on risk management.
And so at this point now, these are actively managed, right? For the most part, so you are looking and obviously have institutional clients.
Correct.
Are you worried about trying to, when you launch these, to get the money into these, to get them going, or no, you have demand for these, right?
There's demand. We're still very early stage, but despite that, we already we raised a decent amount of money in the first few months since you've been off to the market. It's obviously a volatile time right now. I think what advisors are looking for is obviously some more defensive strategies,
but also for diversification opportunities, given the kind of correlation we've seen, especially in ETFs. You may recall this summer the NASDAQ 100 had to do a special rebalancing because there was an over-concentration on the Magnificent Seven. So what we're trying to offer people is secular long-term growth opportunities that you can't access today in an ETF, and then managing those with risk management, expertise, experience.
What about something like the monopoly and oligopoly ETF, TOLL being the ticker symbol on that one? Tell me a little bit about the background on that one.
Yeah, so we think monopolies and oligopolies are some of the best moat businesses you can have. There are existing moat businesses. What we think differentiates monopolies and oligopolies is not just their market position, but often they're regulated. And when they're regulated, that just deepens the moat for these businesses. It makes it harder for incumbents or alternatives to disrupt them. So we think that's an example of an ETF focusing on established businesses with strong growth, strong profitability, strong positioning. Ultimately, we think that's the highest end of the moat investing spectrum, monopolies and oligopolies.
When people are interested in ETFs, I mean, they're different from mutual funds. People still can get these on their trading platforms or call a broker, right?
Anywhere. So approved in all Fidelity, Schwab, Robinhood, you name it. Some of the wirehouses will take a bit more time. We already have a lot of demand from wirehouse advisors, but in reality, we're less than 6 months in, so we need a bit more time before we can cater or expand our advisor audience to wirehouses and beyond.
How many names are in most of these ETFs, and how often are they rebalanced? You said they're actively managed. They might be rebalanced every day. I don't know. You tell me.
So we don't believe in hyperactivity. Some ETF issuers, they rebalance all the time. They tweet all the time. We're taking a long-term view, and ultimately for investing in, say, luxury or oncology for the long term, making intraday or weekly stock changes is not really to the benefit of the investor. So these are rebalanced semi-annually, but ultimately the real focus is on risk management. So ensuring that no one company or no one subsector can really blow up the product. And I think risk management in ETFs today has been underestimated. I think some ETF issuers don't believe in risk management. We think that risk management is the core of investment management, especially in an ETF wrapper. What we're trying to offer people is to offer them high conviction ways to concentrate their existing thematic exposures. So you buy consumer, we offer you the highest conviction exposure within consumer, which is luxury. You buy biotech, the highest conviction exposure within biotech is oncology. I
see. And so just the final thought, as you have more and more coming, you mentioned American Reshoring, that's RSHO, Global Royalties ETF, ROYA, but there are more coming, right, in 2024 and 2025, is that the plan?
Yeah, we have a number of more coming. The idea is to really focus on themes where you can be a first mover, themes where we see there's a lot of demand, but frankly that's not met, and ultimately themes which are hard to index, which obviously reduce or prevent the risk that passive competitors come in. And where passive competitors have come in, historically they've struggled in these themes. Why? Because the nature of the universe makes it hard to index. Higher risk, higher dispersion returns. Active has a role with discretion and risk management.
Right, and I guess you're going with these, whether the market is up or down, these themes will hang tough, I guess, throughout the time.
I think that's why we have a defensive and a growth side. And ultimately, we bring experienced talent to manage these portfolios in-house, and that helps us manage those risks, ultimately, hopefully, to the benefit of investors.
All right, Moritz Pott, thank you so much.
Thank you for having me.
CEO of TIMA ETFs. Coming up next, Disruptors. George Still is standing by. He's taking a look at Zoom video and following its Zoomtopia conference. Let's get some details, AI updates, all things Zoom video with George and the Disruptors next.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
spotlight the biggest market trends on Trading 360. 11 a.m. Eastern.
balance sheet standpoint, the company does have earnings coming up on the 20th of November. I wouldn't be surprised if they announce some sort of share buyback because they have plenty of cash. But considering what's going on price-wise, like I said, in the last 6 quarters, it's been drifting lower, but it's stable. And it's really been in a trading range between $80 and $60. So we can actually structure a November monthly iron condor, which is effectively a neutral trade. And what's nice about this expiration cycle in 44 days is it's right before the earnings. So we can actually sell the 75.80 call spread, so that's above the current price, and then sell simultaneously the 60.55 put spread. And altogether, it's a four-legged structure that could earn you $1.50 per share in credit, or $150 a contract. So the whole objective, Nicole, in this trade is to have the stock just bounce around between 75 on the upside and $60 on the downside, and that premium of $1.50 will erode to zero, all else equal, if the stock doesn't bounce above and below those ranges. So that $1.50 in return is got about a 42% return on risk compared to the $3.50 risk. And again, that total loss of $3.50 only occurs if the stock is trading above 80 on the upside and 55 on the downside.
Okay, thank you for that, George Sillis. Great to see you every day for our Disruptor. Thank you, George. Coming up next, our panel is ready to take a look at two tech giants, Microsoft, Google.
Big pop on the SPY. There's your high of the day. Cup's completed. See if you get a handle.
Is ready right here. Trading 360. We'll be right back.
A lot of volume there.
I remember when I first started flying.
Might be some institutions buying. It's more than just a volume. Algo. Technical break, I think. Got whipsawed pretty bad today. That sucked. It's okay. It's still pretty early. You closed, what, 20 minutes ago? Plenty of time. Maybe catch some calls on this handle. But we could still be in a chop too. I don't know if I want to take this. There is still that RSI divergence. I do like for the bullish side. See if we get a better pullback.
Office productivity suite, and you could reverse that and
Might have been
say, you know, office productivity is the dominant productivity suite. It won
Here,
out
little inverse head and shoulders.
Google Apps. So each one of the two companies has dominant strengths in different areas, and they will compete, and competition ends up being better for the consumer.
Right, right. And you don't want to have political contributions. That's something you talked
All right, I
about,
got
Jim
him.
Warden. I mean, that seems unfair if you have donations and you get some sort of privilege. That's not the idea here. I mean, these names are leaders in AI, and you have so many names here, Jim, that you've listed. What stands out to you in that form?
I'm not saying that it's not, but like I would just be concerned if there was, you know, certain companies that were contributing more to one party than the other. Does that become an issue? Hopefully it does not.
Yeah, yeah. Ivan, which names? I mean, are you an investor? Would you say to buy all of these names at this point? When you look at Google, you look at Microsoft, do some, you know, is it an AI play? Which names stand out to you as buys, Ivan?
Well, I have buys on both Google and Microsoft, and I like them both as AI plays, but my AI play is to stack rank them. Number one is NVIDIA. That's the backbone, whether you're using Google Cloud or Microsoft Azure or AWS. NVIDIA's GPUs are the driver of the functionality. That's number one. Number two, I like several enterprise software companies, including MongoDB and Monday.com. So there's a whole collection of companies that I think are great AI plays, and AI is going to be a powerful driver in so many aspects. And while it's going to be great, and I always say we've all seen Terminator, we know how it could end, but it is going to be a powerful driver of connectivity, creativity, and production. So also Adobe is another AI beneficiary. I'm saying that AI is not going to take the jobs of graphic designers. A graphic designer using AI is going to take the job of a non-AI using graphic designer. So it's going to increase productivity. It's going to increase skill sets. It's going to increase compensation.
I hit my entry there, but
and compensation. So I think this is a powerful trend that is just in its infancy, the way the internet was in the 90s.
Yeah. Thank you both so much. Jim Warden, the Wealth Consulting Group, Ivan Feinseth, Tigris Financial Partners. Thank you both for being with me today. Really appreciate it. That's going to do it for us here on Trading 360. I'm Nicole Petalides. I will see you at 2 p.m. Eastern Time for the Watch List. Do join me then. In the meantime, keep it right here on Schwab Network.
high on the SPY. Just perfectly hit that resistance line. Close some of those. Too big of a position. up, Maui?
For today's show, I've got Nick Theodorakis spending time with us today. I've got Jenny Horn. I've got Andy Swan. I've got George Tillis, and we're talking about three very impressive names. Molson Coors. We're going to talk about Constellation Brands. Like Folio's going to touch on Constellation Brands and the other three. Actually, they're going to cover all three names today. And then Anheuser-Busch, the problems that they're going through and their resiliency, actually. Before we get to our guests and our main topics, let's go through the four major indices and see where they sit. At
AMC bounced off that bottom real heavy, up 2.5 now.
Up 9/16 of a
Getting
percent.
to the end of the wedge here.
Points to 42.50. The Nasdaq
You have to make a decision.
Up 1.2%, 172 points to 14,738. The Dow Jones Industrial Average is up 0.25%, 83 points to 33,088, and the Russell 2000, the laggard of the four major indices, down 0.2%, 3.5 points to 1723 and some change. Now, let's bring in my co-host for today's show. He is the managing director of financial risk management here at Charles Schwab, and that is Mr. Nick Theodorakis. Nick, I'll put it this way. I got 3 hours of content and 1 hour show, so let's get right at it. Data today. Yeah. Did it do anything? Did it relieve you? Did it upset you? What number was the most important? I thought some of the numbers were a little bit light, which I think the market likes. You see what the U.S. dollar's doing. You see what the 10-year yield's doing. What jumped out at you today?
Well, first of all, I appreciate you having me on to co-host
talk about beer
on Beer Day. Like I'm like,
requested
Tom,
you.
get out of the way. I got to get in on
for
this.
Beer Day.
Yes, I know. I really appreciate that. I'm happy we didn't see confirming data from yesterday's job information, Kevin.
Yes.
A little bit of an oscillation back towards, hey, this isn't quite as strong. Right? We saw the private sector shed quite a few jobs. The weakest number since kind of mid-21 in terms of ADP. So I think that's unfortunate, right, for people looking for jobs, and unfortunate for kind of growth of the U.S. economy, but probably a good thing in the eyes of the Fed. And that's why I think why you see the main reaction today from stocks. Obviously, a pretty big down day. We were down basically 2% in index terms across the board yesterday.
Heavy.
We came back off those lows, and that was my biggest concern this morning, like waiting for this number to come out. Specifically the job, if we get more confirming information that, boy, this job market's really, really hot, I think you would have seen a bit of a follow through today. So it's still contentious.
Yeah, we were weak to start the day yesterday. The data didn't help.
No, right.
The job opening survey was big. It just fueled it on the downside. Didn't really recover at all at the end of the day. But I thought some of the interesting thing from the ADP data, and we know the correlations are sometimes a little sketchy between this and payrolls on Friday, but small businesses and medium businesses gaining. Large businesses over 500 employees down 83,000 jobs. So not an insignificant divergence there between small, medium, and large businesses. And here's the thing, job stayers up 5.9%, job changers up 9.5%. Now that seems like a good number, but those are way off their highs.
They're way off their highs. You know, the stayer number I think is interesting, right? You're seeing just a tighter market in that sense. You're not seeing people just, the worker doesn't have the advantage that they did a year ago, right? Well, I can just leave and go make 25% more money just by putting my resume on LinkedIn or something, right? It's just not happening the same way.
All 50 states, including Washington, D.C., experienced a slowdown in pay growth.
So and that was the other. So that to me is going to be really interesting to see. What do we confirm that with the Friday number?
With the wages data.
Exactly, with the wages data for the month on Friday. That if we get slowing wage growth, I think the Fed is paying very close attention to that. They don't care if people are jumping around and moving jobs. They want to know when Kevin goes from sitting in that chair to this chair, does he make 25%
we're getting all head and shoulders
more
up here
money?
now.
Like, that's a huge inflationary problem.
Wait, what?
That doesn't happen for you. If you're moving, that's noise. I think to them, the wage growth, the underemployment piece, like who's really underemployed in all this. They want to see participation continuing to go up, but wages continue to slow. Right? Those are directly. Inversely correlated. The more people that are looking for a job, the more people that are employed, theoretically, right, you bring down the pressure on wages, and that participation number is very important.
Here's
I'm
the
not
other
worried
side.
about switching jobs.
Yeah, here's the other side of that discussion, and that is Kaiser Permanente. Let's get to Jenny Horn in the Schwab Network newsroom. She's going to talk about, Jenny, everyone's on strike. If you're in a union,
Kaiser
by
Permanente.
definition, you're on strike. What do you have on Kaiser Permanente? 75,000 healthcare jobs, Jenny.
No kidding. 75,000 employees walked out of their jobs, which is now being considered the largest healthcare strike really in history. So this is pretty major.
Now.
And obviously, Kaiser Permanente is a pretty massive company, given the fact that it has a reach in so many various markets in the United States healthcare industry. We did see that there are unions which have hundreds of workers at hospitals and medical offices in California, Oregon, Colorado, Virginia, Washington, and Washington, D.C. did say in a statement they remain far apart with the company on important issues, but they did have recently very good discussions with Kaiser. The healthcare workers are seeking across-the-board pay raises and improvements to their pension plans, as well as protections against outsourcing. The contracts did officially expire as of 11:59 p.m. Pacific time Saturday night. So it is set to actually be what I'm understanding
Maybe a retest on
temporary, but we could
breakout
see
level.
further strikes come November because they're still talking through a lot of these negotiations. But nonetheless, more than 5 million people have quit their healthcare-related jobs as burnout has been reported at record highs following the pandemic. So Kaiser has said it's committed to making these employees happy and committed to reaching some of their goals, although obviously not making a deal yet, because right now we are seeing the largest picketing as far as from a healthcare company in history. Again, though, this company is a nonprofit. This is a little bit confusing to me, though, because I was reading about their financial statements to understand more of how this company sort of works. They did report around $25 billion in revenue in the second quarter last year and a profit of $2 billion in the second quarter. Interesting to me for a company that claims to be not profit, but that's just my understanding of it, Kevin.
Jenny, it's about 75,000 workers, I think you said, what I was seeing on it. Any of those jobs that you've seen that are essential workers, I mean, is there any way that the government steps in here and forces that back, I guess, is one question. And the other, we've seen some wild numbers out of I shouldn't say that, the big numbers out of the UAW, 35, 40% wage increases. Any sense of what's being sought here?
So it is my understanding that it's either October 6th or 7th that they go back to work. So this is a temporary walkout again, and I think these negotiations are expected to pick up in November. So this is only, at least from my understanding, a very temporary strike, although I mean, several days of this here, I think, would then spark some government concern because this is such a massive company. I mean, it operates in over 600 locations in the U.S., so obviously has a pretty sizable scale. But again, to my understanding, this is going to go back to normal, essentially, starting next week. But November is where we're supposed to watch more strikes. The summer of strike is now becoming the fall of strikes.
Jenny Horn, I think, this is a season where each union seems to be waiting patiently for their turn at bat and then stepping up to the plate and getting their higher wages. This is a pro-union administration, and they are taking advantage of that strength, that momentum. Did you see this morning that GM tapped into a $6 billion line of credit? So it's very possible that they're hunkering down for the long haul as well. Jenny Horn, thank you so much for coming on, as always. Have a great morning, Jen. All right, Nick, back to our discussion about strikes, about wages, because it all falls in to what we're going to see in wages on Friday morning. Tomorrow we'll get jobless claims. Those have been historically strong the last couple weeks. So we'll look for that number, and then payrolls on Friday, Nick, where we're going to get a wages number.
Again, there's correlations in all this stuff, right? So figuring that, like you said it, what union's next, right? Who's coming up next? If you could sort of project that as an investor, you might be maybe looking for those, the bubblings within other sectors and other groups.
It's kind of building the head and shoulders here.
We've seen the actors and the writers and the auto workers, and now in healthcare,
UPS,
transportation, like so. Where else is there to go? And maybe it is, to your point, just sort of a rolling strike, and that ultimately creates wage pressure across the board. In the short term, again, thinking about how the correlations actually work, nothing's happening, nothing's being priced into the jobs data. So you look at the number we're expecting on Friday, I would expect zero impact from the strike. Right now, maybe the car companies aren't hiring, so maybe there's a little bit of softness there in terms of hiring, but there's certainly no wage pressure during this negotiation. That's going to come a month or two down the line, right, or whenever it happens, right? So eventually, I think, is this number understated right now? Yeah, probably a bit, because there's going to be some concession, right? They've already said they're looking at least a 25% increase for a large number of workers. So you take this number a little bit with a grain of salt. It's old and getting older quickly as these union negotiations evolve.
When UPS settled their strike, the stock rallied. Everyone was very happy. Then you saw the price tag that UPS reported, and the stock sold off hard. GM and Ford, they both broke early, and as this price tag's starting to evolve, their stocks are all stuck. So it's the strike. It's the settlement of the strike and the euphoria around that, and then you see the price tag. And all that lines up to what are wages doing? Wages lead to inflation. So that's why, if you're worried about why 2%, ISM services, 53.6, higher than expected by a tenth, but lower than last month. So, but that's still above 53. Or above 50. That's still a good number. So.
Well, you take all this stuff and the cost of everything going up, right? Your cost of hard goods going up. People are still buying them, right? You're probably not paying for those goods in cash, so you're spending more to buy things just from an interest perspective alone as a consumer, right? You mentioned tapping a line of credit, right? That line of credit last month was 4%. Now it's 5%. Rates are moving very, very quickly, right? At best, right? So the cost, the knock-on effect of these interest rates is real, and depending on how companies are financing that, it's a big burden to bear. It's a big burden for the government to bear from an overall financing perspective, and then it trickles down to everybody.
Some of the comments out of the car manufacturers is that at some point there's just a price we can't go to. Now they've come up to, I believe, 20%. And more vacation, and what was the other thing? They put in
not a divergence on the daily though.
Part of a third talking point,
but
still not even close to
still almost half from a wage perspective, from what they're really being asked for. So it's a long ways to go still. So
we have earnings coming up. We have Constellation Brands tomorrow morning that we're going to cover on today's show. We've got some airlines coming up in the distance, and then the 13th we get to banks and financials, and then we're off and running. Nick, your thoughts as we go into what officially is third quarter earnings season? Anything there?
Doesn't feel like there was a gap between second quarter and third quarter to me this year.
Well, there's about 2.5 weeks.
There's so much volatility. That's been a volatile period, kind of comparing it to the last year. Right? We've seen, VIX at 20, and it's just there's been more intraday volatility in market movement. I think with government shutdown kind of concerns and all that, so it didn't feel like a real break like we sort of had the last couple of earnings cycles. But yeah, I think the banks are going to be really telling. There's a lot of regulation being proposed and talked about in terms of how capital is allocated, how things are looked at. What are the banks doing? Are they holding more capital back? And I think you're probably going to see that as a trend. So we'll see what that does to bottom line earnings. The buybacks haven't really restarted in a lot of sectors, certainly in banks. So we'll sort of get a sense of lack of buybacks and holding tighter capital, what that does. And then travel has been incredibly hot. We talked Boeing a little bit yesterday, and there's massive orders for new planes and all that. But what is United's always one of the first of
Delta's always first, United's usually right after.
Exactly, and just to see kind of what that looks like, because the pricing pressures are still there. Some seating capacity, so I think that's going to be a really fascinating story of what do we hear about the end of the year, going into holiday travel, what are they expecting, and ultimately seat capacity relative to cost of fuel has gone up a lot. Like just hearing that story play out in the travel sector, I think it's going to be
Bastian has a history of setting a really positive tone for the airlines when he starts earnings season. The banks are going to be interesting because they're all beat up, the banks, and you've got a yield curve that is starting to steepen again.
It is steepening, but the loan loss reserves.
But it's not showing up.
The loan loss reserves are going to be fascinating this time around.
But it's not showing up.
I know.
Higher interest rates, and as long as the yield curve doesn't flatten, should be really good for banks. Should be a windfall.
Should be.
They are getting the higher rates. They're getting part of it, but that's going to be a fascinating discussion that we'll get into next week and the week after that. But a lot going on here. We're going to take our first break. We have so much show coming up, it's going to be hard to fit it all in. Let's take our first break, come back with our first trade of the day. That is Molson Coors, Miller Lite.
It's 12:15. We get a continuation. Perhaps. They chop hours though can brutal. I'll grab some more calls. AMC get to the top of that wedge. Holding 422 puts. Nice. See if we break down of this channel. Testing the top of that range, see if it breaks out. Maybe a little double top there. Let's see. See if we keep climbing up. Next little resistance I have is 424.52, which is the low. Or no, this low from over here 2 days ago. Monday's low. Close out of some of these calls. That spot was going. Oh.
So it was also pretty low. So
And because liquidity, when you trade some of these names, if you choose that Molson Coors is the beer brand you want to trade in terms of a stock, you got to make sure it's liquid enough.
Yeah, and no pun intended, right? In the liquidity.
Literally liquid enough.
But you know, you're absolutely right. And looking at, you'll see here in the example trade, right, talking about kind of comparable strategies when there isn't a lot of liquidity in the options market, when there's not a lot of trading. understanding how to
Kinda
look at
rejected
comparable
that.
trades, right? Synthetic positions, stock positions, how it all fits together. There's pretty decent parity here. We'll get into the trade in a sec, but there's not a ton of volume, and you just need to be careful. Don't be impatient when you're trading these things, because if the market's 15 cents wide, 20 cents wide, some of these are wider than that. Just going in with a market order, you're going to pay, literally you're going to pay the worst possible price that you're going to pay at that moment, right? You can work a price, go mid-market or a little below, move your price up, and there's still price discovery in some of these names that don't trade as actively.
Yeah, one definition of liquidity is finishing the six-pack. The other definition of liquidity is your ability to get in and out of a trade for as little slippage as possible.
That's right. That's
so
right.
you want to make sure, by looking at the width of the market, by looking at the overall volume, that you have that ability to do that, or how much of the option volume is trading in between the bid and ask. That's really a good indication of liquidity. You have two trades for us, comparing the cash secured put with the covered call. And usually it's two trades versus one, so it's different. Tell us what you're thinking, one versus the other.
Yeah, when we were setting up the profile here, it's like, is it, do we need two risk profiles or one? And the answer is you really need one risk profile, right? You just need to know the pricing of the combination versus what is the individual put worth. So when I was looking at these, it was about an hour ago when I was kind of digging into the trade. Most of the options were still grayed out in Thinkorswim, right? They just hadn't even traded. They're like, wow, this is it's a fun stock to talk about and look at and track, but man, the options just don't trade a lot. So the first thing I looked at was where's the stock. The stock is a very tight market.
That break.
And I was looking
3 cents wide.
3 cents wide, right? But the options, they've tightened up since then.
Liquidity's there, yeah.
So liquidity's there. It's not quite as bad as it was. But again, some of these options hadn't traded on the day, right? So you're the 62.5 calls right now are 140 to 155. If you compare that to an index or an ETF, like they could be pennies, a penny or two wide. So just not as much there. So in terms of risk profile, the actual chart looks identical. You're going to see a capped profit to the upside and an unlimited risk to the downside. And really what we're looking at here is the covered call. So you're buying the stock and then you're selling one call against that. I chose the 62.5 strike here. It was open at the time and looked to be pretty tight. So
right at the money.
Yeah, right at the money, exactly. But based on where your break-even point is, right, you have a bit of room to the downside in this. So you can buy the stock right here, just an educational example, but you're really creating a credit for yourself, and you're buying that stock lower, right? So break-even 61.06 on the current pricing. So even though you're buying the stock now, right, you're essentially buying it for less, right? And when we compare that to the short put, right, you're not buying the stock at all. You're actually taking in a credit, and when you sell that put, you have the obligation to buy it if the stock obviously goes down to that price. The risk profile looks the same because ultimately, if you do nothing else and you were to be assigned on that put and the stock goes to zero, you're liable for the entire loss of the position.
Well, if you think about it from a synthetic perspective, it's if you're long the stock, short the call, you're synthetically short the put.
Exactly.
So therefore, if you correspondingly just sell the put, it's basically the same profit and loss graph.
So why would you do one versus the other? Well,
the dividend is one reason.
And there is a slight difference in pricing. So that's what I was looking like. What's the actual parity here? And it was a little bit cheaper to do the covered call, right? Just based on how the options were currently priced. A couple of pennies.
Sure.
But if you plan to hold this, right, there is a dividend yield here that's pretty decent, right? So 2.6% dividend yield.
Remember, though those aren't guaranteed. We always have to say that on the show. They have a history of paying that, but it's never guaranteed.
So the dividend factors in not only to the stock itself, but to the pricing of the options, right? So the put price is accounting for the dividend that's going to come out of that. So it's in there, but if you want to hold the stock long term, buying that, collecting the dividend, and then selling a call against it's not a bad way to go.
They are extremely similar positions, Nick. The theta on the covered call is right at $4, $3.99.
Nicker's up 8%.
On the cash secured put, $3.43.
8,000 more to go.
50 cents less theta in the cash secured put than the covered call. You're selling the same strike. The profit and loss graph looks virtually identical. The question is, right? All you can make on the cash secured put is the premium. You could theoretically middle the covered call and where it peaks out, where you make money on the stock, make money on the options as well.
And you know, again, educational example, if you've held this for a while, right, selling calls, there's a lot more tinkering you can do with the overall position when you have two products, the underlying and an option versus just selling the put, right? You're not rolling that put, you're just closing it out and taking the loss if it's through the strike, or you know, closing out.
I roll puts.
Maybe out for pennies if you're short it and it doesn't go down through there.
Love
just
rolling
letting
puts.
it expire worthless, right? I think people sell it and sort of
Midday
forget
chop,
about it.
we're in
That's
it.
not always the best strategy. You may not want to own the stock. You can be selling cash secured puts and not intending to take delivery. You may never want to lay out that cash, but then you have to manage that as expiration approaches.
Here's one thought process. The cash secured put, selling the 62.5 put for over $1 based on where it's trading could be the precursor to a covered call. If you were to get called on the stock where you would buy the stock at a lower level than it's trading right now, then you could in turn sell the call against it and create a covered call strategy. So one could turn into the other slowly but surely. All right, that's our first trade of the day. Let's take our second break and come back with our Likefolio cash tag segment. They're looking at Constellation Brands. They're one of the more diversified alcoholic companies. They're in just about everything. Take a quick break, come back with more Fast Market. See you then, everybody.
Selling a couple more there. I like that it keeps rejecting that larger channel on the day. Go. Do it. Really doesn't want to. Too many people are at lunch. Well, might be kind of starting to roll over the top here. This steeper. Gotta really break this yellow channel. There it is. Go. Just need me to sell a couple more calls. That's all I wanted. goes by.
The company to be, very optimistic in terms of its very diversified portfolio hitting pretty much on all cylinders with consumers. And so, we think that the company should be optimistic. We think that the company should be bullish on its stock. We wouldn't be surprised to see them expand that kind of buyback program.
Yeah, Andy, I mean, when you look at Constellation Brands, you mentioned it. It's Modelo, it's Pacifico, my personal Constellation Brands beer of choice. It's also Corona, which used to be a little more popular, but Modelo has they seem to have benefit from the Bud Light fall off because they've gone to now number one. And I can't, they've got one thing about Constellation Brands, they've got a very more diversified portfolio. I can't. My mother-in-law, she drinks the Rufino Chianti. That's her favorite brand. So, Carol Perillo, shout out to you. So, when you look at this more diversified group, that being said, as I mentioned, wine and spirits, their sales have dropped off. Beer has been keeping this company afloat, Andy.
Yeah, beer keeps them afloat, but that's really just cyclical. I think when you think about Constellation Brands, it's just whatever's popular at the moment. They have the product for that, and they have the relationships to get the shelf space for that. And I think that's a really big deal to get the distribution that they need. And so they can weather any sort of shift in consumer taste really well, as long as they don't, screw up the brand really bad like Bud Light did, then they're going to be fine. And I think, if you're looking for a very diversified kind of, I guess sin stock or whatever you want to call it, then Constellation Brands is probably top of the list.
Doesn't feel like sinning to me, but Andy Swan, we appreciate you coming on as always, talking about the beer segment. And by the way, their data cover all three of the stocks that we're trading today. Andy Swan, thanks for coming on as always.
Thank you.
All right, when we look at a name like this, by the way, I think we're reiterating this. All these stocks have been beat up lately, right? I mean, so Constellation Brands is still expecting their numbers to be strong, even though they wrote down $123.5 million of Canopy growth. Some of their investment in that they keep writing down is it's just not coming to fruition. It's just, remember, all these companies raced to hedge their bets in that market, and some of what they're doing now is writing down those investments, Nick. But
and the biggest one by market cap has to lead the way in that, right? And that's what I mentioned a minute ago. Like if you miss on your first round draft pick or whatever analogy you want to use, if you make a big investment, it doesn't work out, you're paying for that for a long time, and those misses get more and more expensive now as interest rates are so much higher.
90% of Constellation Brands products are sold in the U.S. Their sales hit $2.5 billion. That's up 6.4%, led by beer, led by Modelo. So some of what Andy said and that gravitation towards Coors Light and Miller Light, some of it's towards Modelo as well. Some of it's
is moving.
towards their brand. So
Really?
for a trade,
Really?
we already
Look at that, 7
mentioned
1/4.
that this stock,
She's
from
a fickle
stochastic
one.
level, from an
We do have a
RSI
line
is
drawn down there,
right
72.
at
Look, it bounced right on that.
30.07. So it's touching the oversold
Oh,
level.
the support over
They've
here.
got earnings, Constellation Brands coming up tomorrow morning. So what I did for this, I took a longer view.
Yeah,
of
see if
this
it
company
see if it
because
closes
it's
the
so
day with
beat
an
up.
engulfing candle.
And what I did, I went out to the January
I just
19th.
did I just
Remember,
fold?
when we're talking about January, that means 100.
Because there's a flush out there and a straight.
Is this till expiration? So I want time for all this to wash out, for all the numbers to get better, for the holidays to kick in, right? And so what I did,
Holiday
I bought
kick
the
in.
250 call. Remember, this is a paper money trade, not an opinion on Constellation Brands. If you're not bullish on this, this trade wouldn't fit what you're doing. I bought the 250 call, sold 2 of the 270 calls. The unbalanced butterfly is what we're setting
I
up
really
here,
got to
and then
break
about 1 of
this
the
resistance.
275
Stay in this
call mix.
channel.
So a $20 call vertical.
Continues to reject this. We're going to see this break, and then we're going to be coming down.
Vertical. Do that whole package for right around $7, trading right at $7. So with a move up towards $270, you got a chance for just about a triple on this name, Nick.
Yeah, as you say, it's almost a triple, and you know you were always giving me a hard time,
Triple.
so I appreciate you bringing a
butterfly,
little
yeah,
unconventional, but bringing in a butterfly.
I leaned into that one.
And it is the beauty of that risk graph is you can make that shape on the flip side of the market. If you don't like going in earnings, you want to take the other side. If you want to shorten the time of it, you're still going to get the ability to create a multiple type winner if you're right. It doesn't have to be this far out in time. It works, but you can shorten the duration on that. You can flip the side of the market. So just
All
from an
these stars are
educational
good.
perspective, really playing with the strike
Guys
width
are scared.
and understanding.
Let me flip the puts if we
volatility
break
on
this
strike is really
break this
important.
channel. Close and
Again,
calls,
we say
flip the
this all the
puts.
time. You're not going to pin this.
Unfortunately, it's a slow
The
process with my
likelihood of getting
current platform.
$1,310
Yeah, Genius, there you go,
to spend at the
8.5%.
store off of this trade is pretty darn slim, right?
But especially in a butterfly because you get paid late.
You get paid late, so you're waiting a long time for this to expand. But if they have a decent report, I think is what you're kind of, the conversational theme of
gapping,
what you're
Genius.
going for here is it doesn't have to shoot to that strike tomorrow. That really doesn't even do you a ton of good if it shoots to that strike tomorrow. You're looking for earnings or anything other than a
Or
disaster,
midday
and
chop,
it grinds
so
higher because it's been beat up. To me,
the
it's
short
kind of what
options-
this.
Allow it to
the
kind
short
of
options would hold a lot of
dance
value
around a bit.
if it went right up towards 270 now. And they're shorter. That's
These
actually a
gaps
great
on
talking
Gina's,
point, Nick.
like it's halted.
because there are shorter term trades that you can do with a front expiration trading about 62 and a half. The second expiration trading about 38.
35,
Yeah, 35. Yeah,
38.
When you get to October 20th, it's 31. So there is probably some calendar spreads that would become inexpensive, either up or down, right? Based on that divergence between. So there's a lot of choices here for an earnings play. The expected move about $8.70. That could be the genesis of a trade there as well, if you don't think it's going to make that trade. So a lot of different choices here for what you can do. Mine
nothing? Don't have
is
anything?
a longer term trade. It's a this stock is traded as high as 273. Our short strike is the 270. So $52 higher than where I'm sorry, $22 higher than where the stock is trading
It's
right
a
now.
really wide range, and then obviously your loss is limited to the 690 to the price of the trade. So, if it's a complete disaster on earnings,
This is a fickle one.
You set that number to where
I'll
you're
just
comfortable.
rip out of
Do I want
nowhere.
to do a 2-lot? Do I need to tighten up that
I
top
think it's still
end
in a downtrend,
spread
though.
to
It's just
take-
a little bounce
to
on it.
cheapen that a bit so I don't have as much risk to the downside. All those components are flexible, and ultimately you can tailor that so you're taking on the amount of loss you want and making it somewhat directional. I think the interesting thing here to me is it's unlimitedly profitable, right? So 273 is the high. If they do really well, right, and it shoots up, it's hard to be wrong.
You're insulated from losses
that's
from
exactly
that from that butterfly coming back
That's
down
why I
to
like
zero.
the shape of that curve. For
Yeah,
sure.
exactly right. And the other thing is you got time. You don't have to put this trade on today. If you think there's some
Ooh.
weakness possibly from earnings, you could wait to
Still,
put this trade on at a lower
flush
level.
out there, though.
But just be careful that you don't miss a move if that happens.
No, not you, Spy.
But make sure you
don't flush.
understand what you're doing. This is a
There's a rip out
107-day
there.
trade. All right, Nick, let's take our final break of the show. Come back with a
At the
market
flush.
update from Ben Lichtenstein, and then
But I have
George
an 8.
Tillis is going to talk about our third trade of the day, and that is Budweiser. Budweiser and Bev. So we'll come back with 2 more
Yeah, I'm
minutes
out.
with more Fast Market. See you then, everybody.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 to $500.
Okay, I got puts. I did it. Be kind. Ten jack. Oh dang, that guy's a straight for sure. Oh, he didn't have a straight shot of king. Look at that river. Thank you, river. It's still midday, so it's a little sketchy. To be so decisive on such a short area. GNS 9% now. There you go. A little more confirmation there. But we could still chop area 2, given it's not even 1 o'clock yet. Oh, you guys are bots? What the heck? Carrie, what's your mom's maiden name? I add to my puts there.
A little bit, I think, helping ease some of the pressure we saw yesterday.
Liechtenstein.
Lower dollar, lower Ben, but this crude oil story is starting to get interesting here. It's down 4.3%, Ben. That's a big number.
Yeah, crude oil we saw down to 84.88 and retested the 50-day moving average. Kevin, that's something we haven't been below since the beginning of July. Couple Well, ultimately bullish factors, I think, is what we should get into first. How you had OPEC Plus, the ministerial panel meeting, no changes to existing production levels. Saudi Arabia, Russia continuing with their voluntary cuts. Next meeting is going to be November 26th, so nothing really there. You did have the EIA also reported a draw of 2.2 million barrels. They were looking for a draw of about 400,000. So again, somewhat bullish, but again, getting back to rates and the U.S. dollar and some of the strength we've seen there, some of the demand concerns or destruction that could create ultimately has crude again back down below 85 after, keep in mind it was just last week, Kevin, that we were trading up around 95. So again, right back to the 50-day moving average, something to keep an eye on. As I mentioned, we haven't been below that since the beginning of July.
Fascinating markets, fascinating update. Thanks, Ben, so much. Have a great day, Ben. That is Ben Lichtenstein. He's host of the Future Show every morning on the Schwab Network.
Midday chop.
Now let's move over to Salt Lake City, Utah.
What do levels and lines mean?
George Tillis, he's the
Middle of the day.
Correspondent
Anyways.
on the Schwab Network. Our third alcohol stock of the day. This one is Anheuser-Busch or just Anheuser-Busch or Bud. They have, Budweiser, Bud Light, Stella, Michelob Ultra.
Stella.
This is a company under a
Getting
lot
more.
of scrutiny lately, but if you look at the numbers, their numbers didn't drop off that much, just very slightly.
Yeah, that's the thing. I mean, this is an interesting situation because we know that Bud Light had some challenges, and it's still the leading beer sales or selling brand in the United States. When it comes down to total beer sales in the United States, but there were, of course, challenges since May. But you got to think about the
Dude,
scale
look at that candle.
of Anheuser-Busch
From
or
GNS.
InBev,
What the heck?
The holding company out of
Is
Belgium.
it really that a
They
liquid?
have 500 different beer brands, and they sell in about 150 different countries.
Hello,
But
Head
if
and
you
Shoulders
break
building
down
up here.
Bud Light sales, as reported in September year over year,
Full
they were
house?
down about 26%.
Oh, I guess I do.
And if
Below
you look
full
at the
house.
total volume of sales for Bud Light in the United States as a percentage of basically total beer sales, prior to the controversy,
gotta have
it was
that queen,
about 12%
right?
of total beer sales were Bud Light. Now it's
Okay.
about 9%. So they lost about
Everyone had
3%
threes?
market
What
share.
the heck?
But if you look at the breakdown in sales for Bud Light as a percent of total sales for InBev, or Bud as you want to call it, it's about 17%. But the stock is down 20%. So this may be a situation where, perhaps the valuation is really compelling for this particular company, considering now that, over time, people tend to forget incidents. And I think that's the case that we may end up seeing for this name.
George, it's kind of interesting. They've led the way in kind of what Kevin and I have been talking about all day here. They were the first one to really start selling off. We saw Molson Coors kind of rally from that, but they've all come back down to earth, in the last month, with the broader market volatility, and really Constellation Brands has sold off the most here.
Yeah.
Do you think the correlation here is real, and this is all kind of being driven by Bud and their sales, or is there a bigger macro kind of economic play here going on?
Well, I think it's macro because if you look at it since, again, in the last 3 weeks or so, it's been falling. I think it's in sympathy with the rest of the discretionary sector. I mean, you could make the case for and against that, alcohol is discretionary or not, but nonetheless, the market is perceiving it to be the case. And I think that's the challenge we're seeing in the stock price as of the last few weeks, alongside mainstay competitors. So to answer the question, I think the last few weeks has been macro-centric, especially if the markets have been selling off. But this is a situation, maybe a special situation, where if the stock in this case is down about 20%.
Keep kind of
off
adding
the
puts up
highs,
here.
you got to look at the total impact of Bud Light sales as a percent of total sales. And if you take, like I said, 3% market share decline relative to 17% total sales, it's not that far off of where the company has been in terms of total revenue. And in fact, if you look at total sales for the forward 4 quarters, they're expecting higher sales in the last 4 quarters, with earnings growth somewhere in the mid-single digits versus
Oh my
last
gosh,
year,
like
where earnings
just a complete
growth actually
stop
contracted
wick
by 6%. So I
from
think this is an
GNS.
interesting case where there may be sort of a double catalyst to the upside, assuming, again, the first catalyst that this whole segment or industry group recovers, and the second is there might be a valuation arbitrage in this name, like I said, as the Bud Light sales, which had dropped off about a quarter of where they were last year, start to resume back higher.
This company is diverse. They are global, and their
You and me,
profits
buddy.
only down 1%, even
Because you're all
with
in.
the Bud Light drop-off. George Tillis, thank you so much for coming on. As always, spending some time with us. Have a great day,
Yeah.
George.
Thanks, George.
All right, looking at our third
Thanks,
stock.
Liechtenstein.
And I think
6'4".
George is onto something here.
Yeah,
there
nothing.
may be a scenario that you can paint where this stock is. I mean, the backlash was enormous, right, and harsh. But it was U.S. based more than anything. This is a global brand, and Budweiser is enormously popular in Europe.
I want more puts, but I'm
where
scared.
Some of that backlash may not have reached. So, but the stock is sold
Position
off
sizing today is
incredibly harsh. Nick,
sketchy
your
big
thoughts
for
on
how choppy it's been and how wrong I've been.
Anheuser-Busch InBev.
During the break,
Kind of
I was
increased my
overlaying
position
the three
sizing, trying
charts,
to
and I threw
get
Sam
out of
Adams
bad
in there
trades,
too,
which
Boston Beer Company.
is the way to do it.
As
I
the
think.
3 or 4 biggest,
But
traded
if it's a
names,
good setup,
it really looks like
I said yesterday, it's all about sizing.
The issues
I like
with
this setup,
Bud
so
have been the leading indicator, right?
Yes.
They
Don't
drove.
get this setup every
they
day.
dropped. We saw Molson immediately spike on that. Like Andy said earlier, a lot of those sales just shifted away from Bud Light internally to Michelob Ultra or things like this. So people didn't just ditch the company.
Or from Bud Light to Bud.
Or Bud, the light to heavy, right? That's a good trade sometimes. Who knows?
Afternoon,
right?
Jay.
And then it's continued lower, flat line for a bit, and then continued lower as part of what George just said. So I hadn't really thought about it in terms of relating these stocks together with the macro overlay. But you could see a scenario where branding changes. I mean, Budweiser in general in the U.S. has had some of the best ads, dating back to when I was a kid. I mean, they could easily pivot on
Real
this.
men of genius.
I don't think people are going to have a long-term memory on this type of issue. So I think it's going to be really interesting to see how they correlate together.
GME is green 1%.
Beat up, and I kind of agree with the undervaluation here a little bit in terms of where they've come from.
Maybe
So
finding a
trade
temporary
we've
bottom.
done a very similar look at this group that we're looking at. Remember, Constellation Brands has earnings tomorrow. We
Get a
did
big flush
something
like
in the diagonal.
Bubba
Again,
wants, that'd be
going out
neat.
to January, giving
Even
yourself
VWAP I'd be stoked with, but we
duration
well
and
in the green on the
time
day.
to collect theta
With my sizing
on
right
the
now.
short option. So we went out to January expiration, bought the 50 call, sold the October 13th, that's next week, sold the 54 call. Did the diagonal for about a $4.70 credit. Remember, you've got 107 days on that long option, so the premiums are going to be a little bigger. Your final thoughts, Nick, on a name like this, a diagonal spread, giving yourself duration for a recovery?
Well, I think it's just another great kind of, it's been a day of kind of basic option lessons. Right? And you look, the chart looks a lot like your expiration graph. The blue line there looks a lot like that unbalanced butterfly, right? It's a very similar. You don't have risk to the upside. If we get that rebound that George is kind of alluding to, right? You're not limiting yourself.
Open window
the
to
trade
bluff.
is so long in duration. You have tons of time to roll. Several earnings cycles, right? 2 earnings cycles to roll between now and then.
I mean, a
So you've
full
got
house
lot
of
of
those
time
pair of
to
fives.
position other shorter dated options
Well done.
against that long term, depending on what happens here.
36 deltas, buying the 50 call all the way out till January, selling the 54 call and next week, so collecting that theta. I want to thank Nick Theodorakis for spending the last
Bubba
hour
wants a
with
neat
us.
flush.
For all of us here at the Schwab
Like
Network, have
that
a
is
great day
neat.
and a great afternoon. Next Gen Investing is coming up next with Alex Coffey and Jenny Horn. Have a
I don't
great
know
day.
if it's going to get down to your price, though, in your time. That's the thing. Like, a move to VWAP is somewhat likely, I think. But a move, like, down to the lows and with before end of day. Got this straight there, buddy. Two pair. There's always a 2 pair. There we go. Spies come down a little bit here. Could trade in his horizontal range too. For a bit. Got 423.26 gives us. Bounce there on that range. There you go, SPY. Boy. I'm actually down more than I thought. It's going to take a pretty big move. VWAP will still be plenty, but Bubba, have you ever traded tomorrow's options? Or did you just jump straight to 0 day? Trade like weeklies ever? Or... This guy has a 10. What are the odds I get another heart? I don't know. I think it's pretty low though. I have actually an odds thing. Oh, where'd that go? I have a probability calculator. Bounce there on the SPY. Still liking the puts. Don't really much more buying power. Otherwise I would probably try and get some more. No thanks. Here it is. What do you win with? What? You had nothing? Got a king on the river? You should consider trying like weeklies. I tend to do better on tomorrow's, just because it's easier. I call that. That's crazy. Oh my gosh! I didn't realize how many chips I had. Didn't mean to put it all in like that. Come on, flush. Go 4, 10. 2 pair, I got so lucky. stupid bet. Oh yeah, so it says it's 888poker.com. Gives you the probabilities. Just plug in the cards and it'll tell you like win rate probability. We need to do that more. It's like starting hands to see how good they are. What's better than what.
Rare downgrade today, though. KeyBank did
And
downgrade shares to sector weight from overweight without a price target. The analyst does cite valuation for the downgrade, saying Apple is trading near all-time high multiples and a large premium to the NASDAQ just versus historical levels. They did say that the company's U.S. sales are likely to struggle, and initial U.S. iPhone promotions from U.S. carriers are being restrictive. In addition, they do think Apple's international growth expectations for reacceleration may be too aggressive from here, saying that consensus estimates appear full and Apple's user growth is still more important than its unit growth, but this could be a losing argument given near-term lacks of catalysts, they said, which is resulting now in this more neutral risk and reward. Additionally, we did get some reports out of Reuters that Apple started requiring a Chinese government license to publish new apps on its China App Store after China did tighten some of its overall oversight in the App Store space. The regulatory concerns just continue between China and the U.S., Apple being one of the latest caught in sort of the crosswinds of that storm between the two regulatory bodies.
Jenny wore a bathrobe to work.
Apple's still fairly loved among those that cover it, which is why we keep saying it's so rare to discuss a full downgrade.
King of Hearts.
41 analysts,
61.8% win rate.
No outright sales.
Oh wait, hold on. That's only with one other player.
$199 a share does imply about 15% upside
there,
from here.
20%.
The only thing that made me a
when everyone else has a 10.3. Look at that.
Commentary is they cite
2 pair. I'm just gonna check it down.
From overweight to sector
Looks like I didn't get anything on the flop.
This stock just sold off.
There's nothing setting up there. There could be a flush with the spades.
So you liked it when it was more expensive. Like I'm just having trouble. Like I don't know the last time they updated their particular, I guess, take on Apple.
That's not great.
The stock is cheaper valuation-wise now than it was when you liked it at overweight. So some of that doesn't make any sense to me. But this is one of those things, too, where we're just assessing what's going to happen with this iPhone 15's launch. And half the analysts say it's good, half of them say it's bad, and it'll probably come up somewhere.
Dang it.
And
should have gone heavier on the flop.
My 48 hours
Spades came out of nowhere.
15, that it is not
2 8s, come on.
It has not gotten actually nearly as hot as my previous phone, which had its own issues.
So look at you. Oh my gosh, man. He actually is wearing like a robe.
Headlines seem a little bit overblown. And I got my phone a week ahead of schedule, so maybe that's not necessarily good that they're getting these phones to the consumers quickly. Maybe that means there's a demand issue. But to me, I took it as, hey, they were able to churn out this product, and so far, so good. Again, I've only had it for 48 hours, but speaking nothing but positive things about the iPhone 15
not favored to win.
Now, our next name today is Tesla. Now, Tesla's also been met with a good deal of pressure over the past month, but Tesla has been able to ride what has been a difficult storm for some of these auto players quite well, with the most sizable move
slow play really bit me there.
4.5%, and it has just continued climbing as we've seen some strength persist in the overall market. But Morgan Stanley did reiterate Tesla as overweight, saying they're standing by their rating on the stock, but auto sales numbers show Tesla's share of the EV market is falling. Notably, Tesla's share of the U.S. EV market falls to these historic lows, they said, sub 50%, continuing its downward trend. So this name does skew more mixed among analysts. We have 18 buys, 20 holds, 3 underperforms, 4 sells. The average price target does actually imply downside, but that's because there's some outlandish price targets to the downside, like that $24 price target from Gordon Johnson, which is just totally throwing off then the rest of the average. But I will say this is concerning, but this was always going to be the case. You're going to have companies come in and try to replicate Tesla's
win rate
success.
to their 10.8.
They're still not really competitors. They're just sort of chipping away at their market share. And again, the EV market is still fairly underpenetrated. I think it's all of 5% of the total cars on the road in the US right now. So that whole market still stands to grow, which is, I think, more important to the story with Tesla.
Yeah, they might have a smaller piece of the pie. It's still half the pie, but the pie is a lot larger and it's continuing to grow. That's the big story. Tesla's shrugging this off like it's nothing, as it typically does. It's almost as if Tesla
Diamond's got
is
there.
not worried about what analysts have to say.
I literally have the best hand.
Polarized and
actually, there could be a straight flush there.
on the stock.
I think.
But last one on the list is Alphabet.
Yeah.
This is a stock that has been impressive, I would say, in 2023. A lot more, I would say, robust and kind of methodical.
I should
in
put this
how
guy
it's,
on.
performed. It hasn't been
Fold
one that
anyways.
just makes these giant leaps and bounds and then sells off and goes.
Or King
It's
of
kind
Hearts.
been
Wrong
slow
red
but
card, buddy.
steady, but hoping to win the race.
Yeah, it's like pretty
Maybe
much
you couldn't see it quite right.
Tesla in the way that it trades, but for that reason, it's actually hung on to a 53% gain this year. So it is still
This
off
table
of
is the
its
one that
lows
just
by
keeps on
62%.
giving.
This note was more optimistic from the analysts on Alphabet today. Goldman Sachs reiterating Alphabet as buy, saying that in addition to this, buy rating they see, and while they do better understand this
this
market
is
than 6 months ago,
10.3.
they continue to frame Alphabet as an AI leader in the coming computing shifts that might impact consumer and enterprise computing
10.3 to their
trends.
11.5.
This name skews fairly optimistically. 40 buys, 9 holds. Couldn't find a single bearish or bear equal rating from those that covered this name, and the average price target of $150 a share does imply around 10.5%
Dude, it is
upside from here. So they do continue to see this
pretty
name
strong.
as a leader in all things generative AI.
No, this is
Alphabet
not
was a
that
little
strong,
bit
though.
late to the
Too
game
low.
as far as Alphabet versus Microsoft goes, but nonetheless, they are still been
They spy
one of
doing
the
that-
front runners
doing that
in the
horizontal
arms
chop
race
now.
for AI, as they have called it.
And if you were to
guys
kind
are
of
so
bunch
tilted
this
now.
with one other name on our list that is probably gunning for third place,
Going all in on
it's
everything.
probably Meta. So Microsoft seems to have a leg up on the competition. Some say Alphabet's in second. I think I can make an argument that Meta's right
That
there
is straight.
as well, playing for second or third. Those are the two that I think are most timely in the discussion.
Dude,
AI
I'm
has
surprised
just
they actually let her
been
wear
the
that.
for what seems like 9 straight months.
It sure does. And yesterday was some interesting remarks from Microsoft CEO about Alphabet's stranglehold on the search engine market, which we were joking on Fast Market is like the best PR you could have as a company, that basically another CEO is admitting that you're a verb, and a verb that's used so widely by so many Americans. So we'll be
If
looking
you
at
get
those
another
two
little push up
FOs,
here to
the
this
ones
right
that I'd
shoulder.
say I completely agree with Alex, most closely correlated.
so tilted.
Meta Platforms as well as Alphabet. We'll be diving into some technicals as well as some example trades in both of those names.
Your
Stick
chips
around,
back.
Action Investing. We'll be right back.
Let other people take them. Keep giving you my blinds. Alright, now I'm gonna let you wait for my folds. It was a good table. You have to go and ruin it. It's so tilted. Just 1.5 million after 1.5 million. Great. Bon voyage. What's up, Psych? You up? 4 of a kind? They're quads? Oh, what did it say? Super Brahata. Bangladesh? Bengali?
On this chart.
Liechtenstein.
You have the upper extreme, which is 330. You've got the lower extreme down around 275. And then again, just kind of the middle of this range and this horizontal pattern that we've been in, 300. So again, that's kind of the pivot zone is the way I like to think of it. Well-defined upper and lower extreme to help us determine conviction one way or the other. And speaking of conviction one way or the other in this chart, you're going to really start to see it play out. While on the hourly candle chart, again, you're not seeing a lot of really well-defined trend one way or the other. I would say when zoom out, and in this instance, when we did go all the way back to the end of this year,
got this horizontal channel.
131, you can see we've got a well-defined trend to the upside. We were just talking about that consolidation area that's forming around 300. Here you can see the staircase type pattern that I look for. So again, within this pattern, not a lot of conviction, but as you take a step back, you'll see a very well-defined pattern that's playing out here where value continues to move to the upside. Now, as we're forming this area of balance that I mentioned around 300, we're constantly referencing the prior area of balance because the working assumption here is that we're trending higher, right? Value continues to move higher. So the assumption is that that's going to continue to be the case. Continuation more likely than change, or the trend is your friend, depending on how you want to put it.
Come down
The
some
bulls
more.
are looking for a breakout above 330 here now in a new area to value form at a higher level, and they don't want to see us take out this 266 level because that kind of brings it into question, the working assumption, the idea that we're trying to establish value at higher and higher levels. Now, not only does this mindset, this approach, these theories, these principles kind of help you determine trend, but I want you to see how they also help you determine, again, when trend is no longer present. In this case, we're looking at shares of Meta on a daily candle chart, and you can see the trend had been really well to the downside, right? Well defined into the end of last year, beginning of this year, when, if you remember, shares kind of bottom out around that 95 level, and prior to that, we had been balancing around 132. So again, just kind of the mirror image.
These are the days I trade best. I should just wait for these setup days.
The areas in this instance that were established.
We get a move, and then we get a reversal back to the kind of median.
Everything above that, you can see, was the
back to the
point for the working assumption.
I think it's called like the median.
And you can
whatever,
see
back to
that,
safety.
well, it hasn't just been since the beginning
towards
of
the end of day, afternoon.
In, October, November of
just
last
it
year.
moving slower is so much easier for me, and not only volatility and crazy candles.
Around 300, Jenny.
So now looking at the bigger picture here, what are you sort of watching going forward? We do have earnings coming in the next month or so there is that catalyst to look forward to, but what are you watching now for the midterm?
Shorten some GM.
Because we were just talking about
not a
how
bad idea.
Meta's faring pretty well considering the broader market and where things are. I mean, you've got the NASDAQ, which is still about 1,000 ticks above the 200-day moving average, and you can see Meta a pretty good reflection of that, right? Shares are holding up above this longer dated orange line here. The 50-day moving average, though, you can see
so dumb.
Teetering around it. So this really just speaks
Does
to
anybody still use Groupon?
Again, throughout the years, we've been able to hold above the 50, and now how we're kind of losing some of that momentum to the upside. I do want to point out here that RSI is sort of stuck in the middle as well, not really providing a lean one way or the other. So again, we have to kind of just lean on those upper and those lower extremes, those parameters that we identified before. This is a market that's gone from a high conviction trade to the upside, still a little bit more sideways, but not necessarily invalidating the working assumption that we're still trending up off those lows from last fall.
Yeah, absolutely. I think a really good point there. So now in trading this name, Alex, walk us through what you're
Do you guys see what Jenny's wearing?
Platforms. I think this name has gotten so much attention this year. And for
classic neutral to bullish
classic
strategy. Ben had talked about 300 being a pretty critical level. This gives the stock a little bit of room.
Dude, Alex Coffey can't get his word straight, man. He just keeps glancing over at Jenny.
Still be a profitable trade. So 287 to break even, $200 in risk to make 50.
Oh my gosh.
Pretty straightforward when looking at Meta Platforms. Now to look at another name that it's sort of dwarfed by Meta Platforms just based on its year-to-date performance, although Alphabet shares have been, like we both discussed here, Ben, a little bit more volatility proof. improve. Not to say they haven't experienced their fair share of
Liechtenstein's
volatility,
like, I can do this, I can do this.
steady performer, that being Alphabet.
I'm older and more mature.
Year to date in just a minute when we get into the bigger picture charts here, but I wanted to start again with the hourly candles here because shares of Alphabet are in a very similar pattern in terms of what we just talked about as far as Meta. You've got high conviction to the upside. We're talking about going back to the middle of July.
I don't think I heard a
and then
ding.
you get that sideways consolidation. So more overlapping and rotational as of recent than what we had seen after earnings, if you remember, again, into and in reaction to the quarterly results we saw earlier this summer. Now, as I take a look here, I just want to show you what's going on because here you can see, again, a similar pattern. We've got not a lot of conviction, right, but a lot of information, an upper, a lower extreme, and a pivot right now, that 132 level. We've got a high that we saw back in September up around 139, the low that we just recently came off of from last month down around 126. So let's take a step back because, again, when in doubt, zoom out. Not a lot of really well-defined conviction or trend.
I'm getting a
this
flush
time
here,
frame.
ace high flush.
Taking
Let's
a step
see
back,
it.
we go into the 4-hour candle chart, and you can see in this instance it really starts to play out. I want to direct your attention to the bottom left corner first and foremost on this chart because as I show you some of these areas of consolidation, whoops, hold on one second, the areas that have formed on the way up, you're going to see. Well, we actually started out with a bit of a double bottom here again on the left side of your screen, down around this, right around 85, 87 when we were back in the end of February into the beginning of March, and you can see some of the areas of consolidation that formed that very well-defined staircase pattern to the upside. We're currently balanced again around 132. We just looked at that on the hourly time frame. And as far as the bulls are concerned, as long as we're above 122, we're still in this upward trend here. There's no indication that that's been invalidated as of yet. They're looking for a breakout to the upside and continuation.
It's like
of
a
this pattern we've been
short
seeing. Let me show
bathrobe.
you what's going on because,
I'm just
again, much like what we talked about,
surprised they let her wear that.
we bottomed out last fall, if you remember,
I mean, these
invalidated a downtrend that we had
poor
been
co-hosts.
seeing once we got up above
What are they supposed to do with that?
112. That was the key level that the bears didn't want us to see take out while we were
Play some high
balancing around
stakes.
94.
I'll play
Look
some
what's
high
happened
stakes.
since it's been, well, not necessarily off to the races, but definitely sustainable in terms of upside trajectory. And even as I look at this chart, you can see these areas of consolidation that have formed on the way up here. So again, that area of value is starting to move at higher and higher levels. So Jenny, you can see this is another good instance of a chart that's not exhibiting a lot of conviction on the more intermediate hourly time frame, but there's a lot of information in that chart and it shows the upper and lower extreme, and then once you step back you'll see these trends, these migration of value that's starting to form, and in this instance pretty well defined to the upside after coming out of a bit of a downtrend.
All right, so when in doubt, zoom out. I like that, although it doesn't always necessarily paint the most positive picture for some of these names that are well off of their all-time highs. But what else are you watching here as far as
I appreciate that,
big picture
Psych.
trends with
Thanks, man.
shares?
Well, again, similarly in terms
I mean,
of Meta,
we know why you
take a
tuned
look
in
where
now.
we
It's to
are
see Jenny in her
relative to the
hot
50 to
pink
200-day
short
moving average,
bathrobe.
Compare it to the broader market. Shares of
But yeah,
Alphabet are doing very
thanks for
well.
making
The
happy
bullish
money feel good.
consensus will win in a higher rate environment. Considering what's going on with the NASDAQ, the S&Ps, the Dow, the Russell, I mean, what I'm looking at is a stock that's above the 50-day moving average, well above the 200-day moving average. Again, I mentioned the S&Ps are testing this lower extreme here right now. So just you can see the really well-defined trend still to the upside. RSI not really providing a lean one way or the other, but no indication that some of the strength we've seen off the fall lows from last year has started to give way at all.
Yeah, absolutely. And really great breakdown on both of these names. Our chart master today, Ben Lichtenstein, the host of Futures. So now when trading this name, Alex, walk us through what you are seeing. Leading into some of the optimism that Ben pointed out, obviously well off all-time highs, but this name has been, again, a consistent player all year long.
Yeah, Bank of America leaving it at a buy rating, so looked at a more bullish version of a strategy here in Alphabet. Looking at buying a call vertical, buying one option that is in the money, selling an option that is out of the money, in this case, creating a debit spread, which we spend half the width of the strike. So it's a $3 wide spread, looking at buying the 134, 137, and again, just going to that October
there goes SPY, let it
expiration,
out.
because like
Close
Meta,
a couple of these at
it's
VWAP.
looking like it's going to be the following week that we get earnings from Alphabet. So trying to stay ahead of that. $1.50 on the $3 wide spread is a half the width strikes. I said $150 in risk to make 150 break even. Simply add that $1.50 to the long strike at 135.50. So kind of hitting those loose benchmarks that we have, Jenny, with these debit spreads of equal risk
Not a dress, it's a
and a
bathrobe.
break even in the wheelhouse of the current share price right
Meow.
now. Around 80 cents or so above the current share
It's
price.
like the shortest bathrobe ever, actually.
And as I keep saying, we're sort of on the verge, on the eve of earnings season, so we will get actually quarterly updates
Eyes
from
up,
these
Alex.
companies. Not until November, I believe, but we do still have that to at least look forward to now in the next
Last week
month.
of October.
Last week. Okay, so that's
Good,
coming
Alec.
up,
Pretty
and that's
good.
something
He's
to be
staying
excited
strong.
about here. So
Good man.
Alphabet shares, we are seeing resiliency today, up almost 2% on the session. That'll do it for this segment. Now coming up next, we will talk all things Boeing, as B of A did name the stock a top name to watch into the fourth quarter. We'll discuss that more coming up next.
Oh, I meant to call. Whoops. Well. All the blood is gone from his head. None of them can think straight. They're all stumbling over their words, trying to focus. Look at it. What the heck? It's in the air. Like I just don't care. Girl spy. Oi. Pocket Rocket. American Airlines. Anybody? Only 2 people left here. Oh, that put them all in? Alright, man. I like cleared out this whole table. Is this the same table? Yeah, I think this went back in the same table. Whatever.
With the UAW strikes is being able to make sure that the union itself is going to be a part of this EV boom, especially when you're looking at the battery production facilities. So I think that's going to still be a little bit of a hurdle here. But once again, still seeing some selling pressure, even after having some decent news when it came to their Q3 sales.
Right, so this was what's so amazing to me about this story surrounding Ford is they highlighted some bright spots. I mean, the F-Series is still their most profitable, it's still the most loved actually in the United States, but not enough for these investors. So it's like, are we focused too much now on their EV business? Is that just all the street cares about when they have a very successful other massive aspect of their business that is, of course, just these more legacy car models that they produce?
So ICE vehicles are still definitely the profitable area of the business, and EV sales is going to be the focus, as it's going to be obviously a new technology, a new industry in order to expand here in the United States and around the world. But I also believe that the focus right now when it comes to the car manufacturers is not only the UAW impacts, but also the cyclicality of their business. We are looking at pretty high interest rates when you're looking at mortgages as well as car loans, and we're also starting to see default rates on car loans starting to tick up as well. So that can also impact the ability to actually sell vehicles. And if you have that challenge, the only thing that you can really do is lower prices. And if you lower prices with increasing costs, especially when it comes to labor, you squeeze margins. And so that's probably another reason why the street's really critical of some of these names as of late.
Yeah, I completely agree. And UAW is obviously a massive impact. I mean, how could we not discuss that? Because that is like the looming elephant in the room. I don't even know if it's the elephant in the room at this point. It is like the monster under the bed because it's
That's
something
fortunate because he probably had a straight.
Obviously, but we will leave it there. Great breakdown on all things Ford. Kevin Green, senior markets correspondent here for the network. And I'd like to bring back in Alex, of course, and it's time for FOMO. So, well, I don't necessarily think that Boeing is a constant FOMO candidate. This news out of
I heard that healthcare workers are on strike now.
Makes it compelling.
Yeah, soon I'm going on strike, just so you know.
There was several months ago when Boeing was crushing it. They were doing
whole
a
stream
great job this year. They had so many different things in the pipeline.
With no Jenny.
Major partnerships
That's my
with
strike.
United. They also had fixed some of their 737 MAX headaches
You
that
wait.
have weighed on shares for the better part of the last 3 years.
I'm selling some
and they've
there.
given up all that strength. I mean, they're still, to be fair, they're still off their lows by 52%. But this name was really an
I'm on a
outperformer
boat.
on the year. Now we're down 1%.
It's one of those situations where we always talk about markets being
There she
forward-looking,
blow.
and I think we get caught up
All
in
right.
the moment on talking about the stories. Now we're
sold
just
like
seeing the news
7%.
that was
Would I sell 10%?
speculated on
No,
6
5%.
months ago. And so this
Could sell some more
stock
there.
in many ways,
I get too greedy.
one, before the 737 MAX crisis could do no wrong, and it was just like up every single day, trading way up in the 400s. It collapsed, and the confidence in
sold
Boeing
more.
has eroded tremendously over the years. Throw the
What did I
pandemic in
sell?
there as well, but it's 23% off its highs now.
half?
It's like quietly kind of
No, not quite half, like 30%.
Exactly, and that's what I was like, what happened here? It's sort of like the way I actually feel.
I think
very
we still have more
reminiscent of
downside,
Warner
honestly. I
Brothers
think we come
Discovery.
hit this
That was
channel
one of
down
the
here.
best, if not the best performer in the S&P 500 in the beginning
It's
of
gonna
this
take some
year.
time,
In a
though.
sense, it's
It's
like,
only
what
130.
happened? That's how I feel about Boeing's move to the downside today. But not to discount the good news we got on the fact that BofA did name them a top pick now for fourth quarter, accompanied by a $300 a share price target. That does imply around 57%
All right, psych you up.
upside.
Yeah,
from
Gen I's
Friday's
segment's
close,
almost
which has
over.
been this analyst
Oh, I get it.
issue
They're
this
just doing face
note.
shots
That was
now.
close over around $191.68.
Yeah, we'll see you next time, buddy.
They did say they anticipate Boeing 737 demand to remain robust,
Oh,
and much of the global passenger fleet remains capacity constrained. Also going on to say that despite some of these overall near-term challenges, they really have seen some of these issues that have weighed on their ramp up in terms of their production rates. Boeing is poised to unlock some significant free cash
I gotta quit
flow
playing
generation
breakouts
as
too.
improving product
That
production
jacked me up
and
today.
profitability levels are coupled with around $17 billion in excess of
If I
these
do play breakout, I want it to be on the
737
retest. Only on the
inventories as
retest.
they wind down over the next
Otherwise, I'm
3
gonna be playing
years.
the bottom of
So they see this name
the other end of the
being very
channels.
well positioned now as we enter the final quarter of the year, which seems ridiculous. This was the fastest year of my life.
Oh yeah, I need a
Alex,
coffee.
But other
Good call.
stocks that they did name as
Coffee,
top
coffee,
picks
coffee,
now in
coffee.
the fourth quarter.
Been like a week since I've had a
Kraft
coffee,
Heinz,
so I'm gonna
Petroleum,
get
Five Below,
I'm gonna
and
get
CSX
freaking insane
Corp. We
when I have
also
one.
did get remarks actually recently from Boeing's
All right.
CEO, Dave Calhoun,
Hurry.
who highlighted the resilience of the rebound in travel as noting the company's robust order books, which is very interesting because if you look at the rest of the airline space, which we're going to discuss next with Renita Young, the rest of the airlines have sort of taken on a more cautious approach into the back half of this year. Summer travel is now behind them. fuel costs are weighing on a lot of their profits, and now these rising costs, the question is, are we going to pay them as consumers? Are they going to take them on themselves? They've also been dealing with their fair share of striking headwinds,
your
which has
VWAP
been
chop for
like
a
the
bit.
summer of strikes. I'm joking now, it's like the fall of strikes as we're seeing more persist. So airlines have their own issues. They've been pretty transparent about that. We've seen a major pullback in most of the major airlines over the last month. Hotels have also seen a pullback. So interesting timing for the CEO to say that travel demand remains robust, because that's not necessarily the sentiment that we're seeing.
Yeah, and you see it in the data too. You look at something like personal income and outlays, and you start wondering, why are there so many strikes going on? Well, it's because income's not keeping up with how fast prices are going up. I know inflation's come down. We've seen disinflation, but we've seen nominal income growth go down faster. So even with the rate of inflation slowing, the rate of wage inflation has slowed as well. And so you look at that, and it just adds up to less savings, less disposable income. And that means less travel. That means less money spent on experiences. It means less money spent on goods. And then it becomes that self-fulfilling issue where, well, then earnings disappoint, and that means layoffs. And it goes into that spiral that we got to break out of. When you look at some of these names, though, you can't look at them in a vacuum. Boeing is as subject to the economic cycle as anything else. And the confidence in the economy, rightly or wrongly, is oftentimes tied to the market. And right now, the market itself is a little bit more wobbly. We were just talking about at the top of the show, S&P's being up 20 and how bulls would ring the bell at noon if they could. In times where the market's roaring, they don't even want to ring it at 3 o'clock. And so already giving up half those gains, we're only up 11 now in the S&Ps. We're in a different stock market than we were 2 months ago.
We are, and I definitely think that we feel that even with, as we speak, we're seeing the Dow and Russell slip into slight negative territory. It doesn't seem like the moves to the upside are able to stick. Doesn't seem like the moves to the downside are going away anytime soon. So considering that with a name like
crazy.
Boeing, I think
This wasn't even that big of a move
we've seen in shares as of
from
late.
here to here.
Now, what's surprising to me, I guess it depends
Like compared
on
to this
your
morning's move,
perspective on Boeing. Was surprising to
where
me,
I
though,
actually
that we
had
do
calls,
see
and then I closed them
19
here.
buys, 9 holds,
I was so
no
scared.
underperforms, no sells. So Street does still feel
This
optimistic.
move is
on the
much
same. I
bigger
feel like this is the theme
along
right now,
those
Alex,
calls.
for every stock we
But
looked at.
my
I'm
position
like, well,
sizing
there's
for
no
this was
sells
so
on
much
the name.
larger.
That's going to have to change. If we see this consistent
Actually, not so
selling
much
at
larger,
second month now
but it was
of some of
larger,
these
so this
stocks
made
being
a
down
lot more for me.
percentages, I can
And
imagine
I
that
lost.
analysts will take a more sideline
Yeah,
approach. But I guess
I'm gonna review the
that's
trades
just
today. It's gonna be
my own
interesting.
take on it. The average price target is at 248, does imply around 32% upside from current levels here.
I agree with you. That's probably what we will see, but ironically, that's the opposite of what you should see. As markets go down, we should be talking about
Listen to how focused and concise he is now that they're sitting down and
potential mistakes that they have on some of these things. But this stock, like I said, hung out in the $400 level.
he's like so clear with his words and so
and spent a good amount of time above
so decisive with his thought process.
2018 all the way up until 2020 even, when we had, of course, the pandemic really impact things. But the confidence, as I said, in this stock has changed tremendously. This is not a name that I feel as many investors want in their portfolio, given the missteps. Now, the missteps could have been catastrophic for this company, but there's only one other real competitor they have to deal with, and that's Airbus, and that's allowed this company to get its feet, stabilize, and get things back on the upward swing. Bank of America, we were just saying, has a $300 price target. This stock's trading at 186. So some of these analysts are very, very optimistic, and there's a ton of opportunity. I mean, even if you took it at
you could do it once you're both sitting down and legs are below the desk.
Lowest level in the last 5
You'd
years,
be sharp as Alex Coffey would.
You could go below that, right? No one denies that. Its highest level in the last 5 years is 446. Okay, so it could go there. It's been there before, but even just that Bank of America price target at 300, you look at that, the risk to reward, if it just went down to its lows of 90 or 89 versus going up to 300,
bets
you
are so
can
tiny.
potentially make more.
Just
Now,
start pushing
those
these guys
aren't the
around.
limits. It can go way higher than that. It can also go to zero. But just looking at that, you could understand why analysts are still optimistic on this name, even though the story behind it, it's not as a positive one as it was 6 months ago.
No, it's definitely not. And what's always amazing to me is actually some of the issues that they deal with on a supply and demand basis, because this is basically a duopoly. I mean, there's Boeing and there's Airbus, and that's pretty much it as far as airline manufacturing goes. So it's like they should be a huge beneficiary of any strength in travel, but they just haven't been able to translate that at least into its price performance. So Boeing, I mean, positive note today. We'll have to watch, obviously, for the fourth quarter. I did find the rest of the note from B of A actually pretty interesting if you want to check that out on some of the other names like Occidental or Kraft, for example. But we will leave it there for FOMO today. Now, coming up next, we will talk a space that is very closely related to Boeing, very closely related to some of these headwinds we just discussed. That is the airline sector, which continue to fall as analysts turn a little bit less optimistic. Renita Young will have more on that story for us coming up next.
If I can bluff these guys off stuff. Queen 7, nice. Oh, we got a queen on the river too. I forgot I don't have all those chips anymore. Should a phone review on it? Wearing the bathrobe? That's why you need to join Discord. This dude. Over straight, I guess. Little bounce around spy, doing the VWAP chop. Still holding my puts, most of them at least. Might not come down to the Bombas channel, but I still could. Plenty of time left in the day. Okay, SPY's still coming down here. Broke through VWAP. a good exit for some of these puts. S&MP is up 28%. Zero family interruptions? How do you know I'm not? How do you know that wasn't just my wife there playing poker? I'm gonna take definitely some profits at this channel. Maybe some before. Be patient. Little flush there on SPY. Oh, I fold this shit. Dang, I missed that exit. It's so fast. Excuse me.
Sales data that we got from Ford, actually a little better than GM. But what are you watching when it comes to all these automakers and the UAW strike too?
Closing 5 more there.
Hello, Nicole. Yeah, it's amazing that Ford is claiming good news. Why? Because they posted third quarter sales of 34,000.
Another half of them at this point.
861 vehicles, up 41%
Just over half,
for
I
their
think.
hybrid sales. When you think Tesla stock sold off with what was the number? 400,000 cars. So if you think about it, Ford, this is good news for Ford, right? Their sales, their hybrid sales, led by the Ford F-150, are starting to pick up pace. But they're still light years behind Tesla, Nicole, as you know, and they have a looming strike where Tesla does not have those headwinds in this company. So Tesla's rallying today. Ford is actually down on this news. So it's a bizarro world day in cars.
Bizarro
the company that
world.
came out with good news is down. Tesla, that we thought had disappointing news, that stock is up, about 4%, up almost $10.
All right, so we'll continue to watch all of that. It was amazing when I saw those deliveries and at least some good news for Ford, but even eking out over at General Motors.
I was selling some more
oil
there.
Prices falling almost $5. A call on ExxonMobil from UBS. What are you watching? Tell us more details.
Yeah, energy stocks are down across the board. Not really surprising with the price of crude oil.
After the sell the rest.
One of its bigger moves in quite a
Gonna
while,
hold.
Nicole. When I look at the board here, I've got crude oil, there it is, down 5.4%.
Like a bottom though.
As we get to the 2 o'clock Eastern hour, Nicole. It's a big move. Remember, in the overnight trading a couple days ago, crude oil touched $95. For it to drop
Pretty big
like
bounce up to
this,
VWAP.
you're starting to get some whispers about, number one, increased U.S. production, but also OPEC Plus confirmed that they're holding their production cuts through the end of the year. But
Saw these
you
last
saw
5
earlier
minute
in the week,
times.
Citigroup came out with their report on crude oil that says it
Some red
could hit
candles.
$70 by the end of the year. So suddenly, in a story that was only bullish for crude oil over the short term, a couple bearish notes have slipped into the discussion, Nicole, and suddenly crude oil finds itself having a pretty big down day here, down 5%.
Yeah, pretty amazing, this move that we saw. Just when we were talking about $100 oil, now we're back well below the $90 mark. So a lot of volatility. I mean, oil was the best performing group last week. I mean, when you saw energy stocks, people were thriving and happy about what they were seeing, only to see getting hit this week. Kevin Hanks, thank you so much. Good to see you. Now let's take a look at the bigger picture. Ed Siddell's with us, CEO and Chief Investment Advisor, EGSI Financial. Ed, good to see you. What do you make of it as we kick off here a new fourth quarter? Certainly already seeing some volatility. What stands out to you?
Well, thank you for having me back. You know, it's a mixed bag of tricks. I mean, we're just talking about energy and oil, and now all of a sudden it went from being extremely bullish to bearish. And I think a lot of people are really concerned with their expenditures every month, and that's really, you know, causing a lot of the volatility in the market, especially when the Feds said that, you know, they're going to have another rate hike, and the rate decreases are not going to be as large as originally expected in 2024. I think they're still
No
gonna
way,
happen,
you're
but,
back green
you know,
on
it's
those,
creating a lot
Bubba?
of volatility in the market.
This
So
stress.
are you worried about a recession, and what
Wow,
kind of
well
recession
done.
are we talking
Not
about?
really well done.
Yeah, you know,
But I'm
about
happy
this
that you
sound
got out of
recession.
them.
I mean, we all know it. We feel it, you know, at the pumps, you know, when we go to the grocery store. You know, the Feds aren't ready
guess it was-
to call it a recession
I
yet.
don't know what to say.
Just like they weren't ready to
Happy
talk
you're not
about
red on them.
inflation, saying that it was transitory. So, you know, these
Buying
are
puts
the
an end of
things
week.
that, you know, as we continue
No,
to see,
I'm not. I'm
job
just day trading
losses,
SPY.
Meta just announced, you know,
And then
some
I've
more
got
job
some
losses.
longer dated
And those are the big
6
important
swing
jobs that have
swing
benefits, high
positions
paying,
I'm playing.
and they're being replaced
I closed
by
most
those
of my
jobs
longer
that,
dated.
that are
My
second and
January
third
puts.
jobs where,
I
you know,
closed them back
typically
here
in the
actually.
retail and service sector.
Closed them
And we're
here.
going to see more of those jobs
Most of
continue
them.
to
Closed some
show
more here.
up, especially as we get close to
Now I'm just left with like
Christmas
one or
season.
two.
So I think we're going to have a recession. I'm not sure how bad it's going to be.
Yeah, I thought we were
It's
gonna
gonna
bounce
create
on that area.
opportunities.
So I'm looking for a bounce actually to reload on those.
Before I get to the
Down
different sectors
65%.
you do like
Yeah.
or things you're watching, what about the regional banks? Because there's been a lot of scrutiny. They had a really tough time where we saw the market sell
Okay.
off in a big way in March. What goes on here now? What's your look ahead for this group?
No, it's still a big concern for me. You know, you've got over $1 trillion of non-recourse loans that are coming due in the next 18 to 24 months. And that's
I saw
going to
another one
create a
there.
lot of pressure on these smaller and regional banks. And, you know, from a bigger perspective, that's really going to affect the economy because it's those banks that provide the majority of the loans to small businesses, you know, which is really the lifeblood of America. So, you know, as those continue to hit, you know, I think it's going to be a drag on the economy and really, unfortunately, add to the recession.
So you're worried about a credit crunch on the heels of what's going on with the regionals, particularly because they have this exposure to commercial real estate, for example, and you have a higher for longer Fed outlook. What do you think the Fed should do next?
You know what? Here's the problem. They're talking about raising it 25 basis points. The original estimate was cutting 100 basis points in rates next year. They reduced that to only cutting 50 basis points. But until we get spending under control, I mean, that's inflationary. We're spending over $1 trillion more per quarter than what we're bringing in. And so until we get the spending under control, I think inflation is going to be sticking around. Everyone keeps saying it's sticky. I think it's a little bit bigger than sticky.
Yeah, I was down pretty good on the accounts in this morning's chat.
Over the sectors you do like.
We'll review the trades. I'm curious myself. I did all right on some of it, and then this I got whipsawed right in here badly.
Because
then I just
GDP was up, and one of the main reasons
basically held through one of the opposite
that
trends. Didn't cut losses.
Defense contracts to Ukraine.
Thinking that
if you look back over
this was happening to an extent.
World War II, Korea, Vietnam,
and then I averaged into my calls, but then
companies, as well as
I'm still bearish, so I closed them out here. Those calls would have done
they're doing very well,
a lot.
Especially in times like
the whole move.
I still like energy, even
Did
though
not
it's
want to
looking
hold
like
those
it's
though.
bearish.
Too bad.
So as long as OPEC, continues to hold their production, I do not see the U.S. increasing production here. I mean, they continue to strangle the production in the Gulf of Mexico as well as shipping. So, I think that might be a buy right now, especially, when you look at those high value stocks like dividends or like Exxon that are paying dividends.
Yeah, understood. Ed Siddell, thank you so much. EGSI Financial. Thank you, Ed. Coming up next, David Darst is standing by, and he's looking at names like Colgate, Oracle, looking for value in a volatile market. Find out more when we come right back.
Doing in that much with not the flush. I was looking up online poker last night a little bit. Probably the best place to play online. WSOP, I don't know if it's the best one, or no, I've seen Rampage play on like some Chinese one. They use the yen. I can look it up, figure out which one it was. Because WSOP, I don't know if it would work. I could use a VPN, but you can only play in Nevada, Jersey. There's like 4 states, I think, Arizona. I don't know if they would have like a VPN type blocker that would work. But there's like a Chinese one or something. Maybe I can play that. Bottoms, yeah, it seems like it's starting to kind of round out a little bit. Let's see. Yeah, I'm out of the rest of those. Ooh. All right. Stoked. That ended up working out. If it wasn't one of these reversal days, I probably wouldn't have been able to turn my account back green. It wasn't one of these. I do the best on these. You learn how to do better on continuation days and range bound days. Yeah, I'm done. Done for the day. Not bad. Not bad.
You've got 93% of the Russell 2000. Now that's not the
I didn't get all that
500.
whipsaw back here and
93%
bad
of them,
position sizing.
Are
I would have been up another.
their 50,
Actually, not too bad.
Only 7% have made their
Up another
852-week high.
400.
So you've got a lot of despair, despondency, washout. And so I think you can get a nice year-end move here. October's usually up 6/10. November's up 9/10 on average now.
Right.
December 1.2 and
We
January
grab
1.3.
calls or whatever,
This is the
but
best 4 months of the year. And usually October starts
yesterday
as a
I
dip,
gave away half my
which is
gains in like
done, which
5
is
minutes.
done. Correct.
Over-
And you feel
over
like
trading.
it doesn't have to follow it,
and
but
all that volatility.
this is the way
Yeah,
it's
Yellen was going to be speaking.
turned out. Have we hit the lows? No, because I think the medicine
A lot of
is
straddle,
just
422.
beginning to be felt. The
Daily?
aggressive interest rate increase of last year, 5%,
Little VWAP chop straddle.
since March of 2022. Okay, that's one. The second part of this is you've had you've got 4 breaks right now. Break 1 is the dollar high. Okay, that's compressing the economy. That will compress exports, and it makes the value of money they bring back worth less. Okay, from the big overseas giants. Okay.
Yep.
The second thing is the oil price Fed has been constraining things. It's eased off a little, as you just mentioned, which is maybe the start of something. Okay. The third one is the financial
break a
markets
VWAP
Fed. Stocks down,
upside.
bonds down, everything down. Listen to this, Nicole. Listen to this. Over the past 12 months, only $300 billion has been taken out. $300 billion has been taken out of stock funds. Okay.
Yeah.
15 billion has been
The
taken
raise.
out of bond funds.
Almost
Not as
folded.
much, but still a lot. And guess how much has gone into money market funds? $1 trillion. So basically, there's all this cash sitting there. But the 4 Feds, the stock market and bond market Fed, the oil price Fed, the currency Fed, and finally the Fed with quantitative tightening, with their rhetoric, higher for longer, and with the interest rates, the policy interest rates being there. So we're not going to get them going down a full percent. This is leading me, Nicole, to think we're going to have a recession in the
down
first
2.5.
half of next year.
Right.
Could be wrong, but I think you've taken this medicine, and the medicine's just beginning to be felt. Anybody watching your show who's ever taken antibiotics, they say don't stop taking them until you're done. And we
Jack.
basically
Oh,
have
6
not-
A's.
the effects of all
it
the
down.
medicine have not been felt yet. They're about to be felt.
Well, let's hope the Fed doesn't go crazy anymore. Let's get to your picks. You have Colgate, Oracle. Tell me a little bit about each one.
Colgate was founded right here in New York City by Mr. Colgate in 1806. Okay, it's been around. They are the world leader in toothpaste. Okay, they have the stock's been down 8%, yields over 2%. Nicole, it's a classic consumer staple. Defensive. That's why I'm going with a little defensive, because these growth stocks, the Magnificent Seven, the Nvidias, the Teslas of the world, have gone up so much. Now it's time to basically peel back and start to put them in some of these. Look here, Colgate's got 50 billion in. 20 billion in revenues, 2 billion in earnings.
So how much do you think it can go
I didn't even see how to straight. Whoops.
I think you can get a 15 to 20% move from this
heck?
level. It's down for the first part of the year, and that includes the 2.5% dividend.
All right, let's get to Oracle. Quick on
Oracle, the
Then you
database
have
management
the
giant of the world. Database management giant of the world. Started in 1977 in Santa Clara by Larry Ellison, who owns 43%
Guy's
of
like
this company,
Wikipedia.
which is worth $300 billion. Makes him worth $120 billion. What is the whole thing there? You've got database management plus artificial intelligence.
Little inverse head and shoulders,
And
maybe
that
sitting up on
one,
SPY, but
listen
I'm
to
done.
this: 50 billion in sales, 20 billion in net profits. How's that sound to you? 40% net profit margin, and
It's
they've
early. Up or this you might hear some of the noise.
Oh, they're
from
getting
the,
a national test.
The alert.
I just got that. I didn't know that was national. I guess I did just say national.
I don't care, Nicole. I don't care.
Maui fires, and And so it was supposed to be at 220. It looks like we're a minute or
We're
two
thinking
early.
of them in strength, sympathy, and solidarity and solace. All four, the S's: strength, sympathy, solidarity, and solace.
Yes.
The
Couldn't
people
have
in
said it
Maui.
better. You could not have said it better.
Now we're going back to Oracle very quickly.
All right, you have 10 more seconds.
28% return on equity. This is the long-term path for a stock, is its long-term return on equity. 28% return on equity.
Yeah.
That's a great buy. It's up 30% this year. It's up 30% this year.
All right, and I know you had the Russell 1000 Value ETF and the Treasury Bond ETF, but we're going to have to leave it right there, David.
Thank you for having me, Nicole.
Thank you for being with us.
Happy October.
Always. And you as well. Always nice to have David Darst with us of Americana Partners. All right, coming up, earnings season. It's almost upon us. What do we need to know? Names like Domino's, Delta, JP Morgan will be among the first to report.
Okay, send out an alert to the Theta Farm members on YouTube. Come on. AMC getting to the top of that wedge. Now it hits both ends of the wedge twice in a day. Look at this. It's getting so tight. Rumble's up 2.5. There's that SPY chop, that VWAP chop. The flush, holy. Wow, SPY just flushed through there, man. Guess that's why you leave runners, but given VWAP, time of day, that's fine. I'm gonna give back all these gains in case it kept going. And a huge candle up. Oh, is someone talking right now? Don't think so. Not sure what's going on with the SPY there. Pretty friggin' jumpy though.
see as the
Oh look, it's life relationship.
effect of this macro development. And on the finance side,
Just kidding. It's
I'm really
Shiraz,
interested in in the lower end of the income distribution and the households, how management teams describe in terms of delinquencies and the financial health, because that has then implications on the
And another alert
retail
to Data
end
Farm
of the
members.
market as well.
Right, understood. All right, Shiraz Mian, Director of Research, Zacks Investment Research. Thank you so much for being with us. We really appreciate it. Thanks for being here. All right, coming up, we continue our show and we'll have more on Amazon Prime Day because it's back. Our next guest will preview that Amazon event and explain how the rest of the major retailers are reacting with sales of their own. We'll be right back.
And one more alert for the Theta Farm member. Now bouncing a bit. Toothpaste. Am I going up because of alert? Oh, you think the alert dumped the markets? That's what that was from? No, that national alert thing? It was just a test, wasn't it? Or just started panic selling. Maybe the algos triggered something with the algos. Getting ready for their crash, getting all warmed up. AMC, there you go, popping up 4%, breaking the upside of the wedge. Let's go. Get calls, maybe. You can hold it. Needs to hold it. Good. What GNS end up doing? Felt 9%. This looks like a little bounce in its downtrend though still. Perhaps not, we'll have to see. We might get an engulfing candle. At the very least some consolidating down here and then maybe a rally. It's pretty jumpy though, that one. Wakes up out of nowhere. Look at the volume on that wedge break. Wow. almost 5% on AMC. I think the Taylor Swift thing comes into the theaters the 12th or the 13th, maybe? Friday the 13th? About time to get some leaps on Dish. Close.
VIX has been on the move. Keep in mind, it had been coming off, right? We had been watching it back down to those 3-year lows, back to levels we hadn't seen since we're talking about the fall of 2020 ultimately. But again, as we inch our way back up, or 2019, I should say, into 2020, but as we inch our way back up here now, right back to that 20 level. So I think it's a reflection of what we're seeing. Again, investors are a little bit concerned. I mentioned heading into that jobs report here on Friday, but with the run-up we've seen in rates in the U.S. dollar, I mean, that's got the bulls on their heels, to say the least.
Understood. And as you talk about what's going on with oil, when we see it down about $5, it's pretty amazing, and 84 as the handle. Your thoughts and what people are talking about?
Yeah, we were talking about in terms of how investors and traders have a lot to focus on, those that are participating in the indices and stock traders, but similar situation playing out if you're involved in the energy markets. I mean, no rest for the weary there. It's like fasten your seatbelts, keep your hands inside the vehicle at all times until it comes to a full stop, right? Because we've seen some major volatility. It was last week up to 95, and then look at the move lower here today, back down to, you can see we bottomed out at 84.16, but no rejection of that lower level as of yet. And oftentimes the way stocks go, crude goes, right? In terms of the indices, it's that overall sentiment sort of indicator. Taking a look at the move lower, as I mentioned, from 95 last week all the way down, we've given back $11 off that move. I do want to show you where crude is and how that run up. Here it is on daily candle charts now, the spike up to 95, how it took out the highs from last fall, October, November. But look again, follow through somewhat limited. We oftentimes talk about time and the market's ability to hold above and sustain price activity above a key area of resistance. Again, that area on the left side of your screen. And in this instance, you can see we didn't spend a lot of time above that area at all. In fact, we've swiftly rejected it, as I mentioned, back down below by about $11 here at this point off that upper level. I want to show you what's going on here as we take a look at crude, how this move lower here off that $95 level. You can see it's got us right back to the 50-day moving average, and we haven't been below it since the beginning of July. So it really speaks to some of the strength that we've seen throughout this move up over the last few months, as crude oil, again, has been and continues to remain, a volatile intraday trade, and still looks like it's on a bit of a trend to the upside. But, yeah, definitely pulling back significantly here today and retesting that 50-day moving average. We've seen a lot of fundamental activity at play, though. We heard from OPEC recently talking about how, again, they were going to continue with those unilateral, those production cuts, ultimately, those voluntary production cuts. The Saudis continuing with their cuts as well. And then in addition to that, again, to the downside, you've had Citi calling for $70 oil, kind of bucking the trend in terms of what we were hearing about over the last couple of weeks, which were analysts like Goldman calling for triple-digit $100 barrels of oil. So again, just quite the tug of war here, and we're seeing that play out in terms of the intraday price activity. Some big swings as of recent, Nicole.
All right, Ben Lichtenstein, great to see you. Thank you so much for that. We appreciate it. Joining me right now, we're going to talk about the fourth quarter. Looking ahead, we go into high gear, and then the holidays are upon us. What does that mean for the markets? Gil Sadeh is with us, Chief Growth Officer at Sky. Thank you for being here. I'd love to get your perspective, a quick perspective, before I get to Amazon and some of the details there. How are you feeling about the market and the consumer overall? Because I know we're going to be talking about shoppers in this segment.
GME is up 1.3.
Absolutely. Thanks for having me. First and foremost,
AMC now 6%.
The number one trend we see is that consumer spending is back up.
Some
we
volume,
see it
that's
through
good.
monitoring billions of ad spend dollars on digital and online. We see what advertisers do, and it's been consecutive growth of spending throughout since the beginning of the year, which is the best indicator that we could expect a positive turn.
So I know that you actually did a survey, right, of shoppers, and what did you find?
So we surveyed about 1,000 consumers about holiday
We
shopping
got a
in
retest
general,
on this.
and
I'm going to grab some
specifically about
AMC
Prime Day.
calls.
And over 2/3 said that they would actually shop the event, and 91% said that they have purchased during Prime Day before, which are all good signs that is part of their habit, all good signs for Amazon. We also asked earlier this year about a second Prime Day, and 85% were excited and say they would participate. So very good signs. On the flip side, we discovered that 63% are actually happy to wait until Prime Day to get a better deal, especially large ticket items, which could mean that we could see some softness in the weeks.
He's actually not crazy on it either.
The event. And last interesting point is that 65% of respondents are actually likely to compare prices on other retailer websites, which could create a halo effect and allow other retailers to capture some of the demand.
Yeah, I think that's interesting because the competitive landscape, I mean, the talk was always that Walmart was the name that could really take on Amazon because Amazon had just become this behemoth in every way.
Rallying up there a bit.
Is that still the case? Is Walmart still the biggest competitor or player when it comes to this? How do you view some of the other big box retailers?
So definitely Walmart is where they would go to compare prices as the top choice for consumers. So we see that, we hear it in surveys and in our data as well. But also Target Circle event is another event that is primarily targeting the existing members of their loyalty program. So they kind of trying to keep their consumers from going elsewhere and also maybe win a few new ones on the way. But definitely we see those big box retailers kind of prepare themselves to the holiday season, try to take part of the pie.
Understood. When you talk about some of the
stock buyback, position probably better with their.
I don't think they're falling behind necessarily. It's really where the volumes are today. I think it also goes back to the categories and what people are mostly shopping and where shoppers would go to the right retailer based on the product they're looking to buy. So that's also a factor the actual product category. It's also how you're building that demand earlier before the holiday season. And we definitely seen other retailers that maybe in previous years were a little bit behind doing more of that, and also expanding reach outside the traditional media channels to drive more traffic and more awareness.
Right, understood. And so what do you think they're going to be looking for? You said particularly for big ticket items. Are you seeing any themes, what they may be looking for going forward?
So yeah, the main categories specifically in Prime Day and the kind of the main events are usually consumer electronics and computers, and beauty and personal care. These are two main categories that always perform best on those events, although they're very different. The first one, the consumer electronics, are again large ticket items. They're more one deal with return on ad spend that is very good for advertisers. The beauty and personal care are more of kind of the advertisers see them as a way to acquire new consumers for the lifetime value of the consumer. These are smaller ticket items, but then they get the consumer as a loyal consumer.
Right.
Specifically on Amazon, I think it's we need to remember that's only the second year with two Prime Days, two Prime Day events. Last year, July was clearly the bigger draw, but we need to remember that October was, a different.
Still rallying there.
The market was different last year. So this year, we think both advertisers and consumers are more prepared.
Okay.
We still have all power hour, so we could still see a rip.
Prime Day that the other
like new highs
they
today.
also like to give some discounts because they want to get in the game while people are feeling ready to open their wallets. They too want to have some good discounts. And Black Friday usually was the day after Thanksgiving. We know the discounts are now starting in October for Christmas, for example. Tell me about you have the Prime Day, which will be the second Prime Day of Amazon. I'd like to just hear the details on that. You have Target Circle event, which is coming up, and anything else that you can throw in there to get people ready for this.
So definitely, as we said earlier, the Prime Day creates this halo effect on other retailers and other events. Everyone is trying to take part of that shopping kind of period. So we see more activity towards the holiday season by other retailers. We need to also remember that a lot of those
Overstock names Marcus Lemonis to board to help with Bed Bath & Beyond reboot.
They're trying to bring consumers into their to their website, so that creates more opportunity. Part of the planning that we see by advertisers is that when they part of our forecasting and planning technology allows brands to make the right decisions where to bet, which products, which retailers. So definitely we see this year more opportunities than the years before.
Right. Gil Sadeh, thank you so much of Sky. Really good stuff. And it's nice to know that people still willing to spend, as you noted, they're getting ready for the holidays. All right. Gil, thank you. Coming up next, we're going to discuss Tilray earnings, the outlook for some of these cannabis stocks. They used to be flying high and then have been in a big pause. The cannabis banking bill cleared committee now in the Senate. Let's hear about that and more when we return.
Young lady.
Oh. He's a rich guy, has a lot of companies. That is neat. What is this? YP is selling off, huh? Breaking through that support. Like nothing looks safe right now. It's crazy. AMC looks bullish and it doesn't even look safe.
Very bumpy road right now. The craft brew market isn't. They're the number 5 craft brewery in the U.S. right now. So they're not just a cannabis company.
And that's part of it. I mean, whether or not it's going to be a pure play or cannabis end. Your thoughts, Alan?
Well, it's nice to meet you, Andrew. I agreed with only the part that you said about they're not just a cannabis company. Agreed. And everything else you said, I'm going to take the other side of. I don't think it was a good quarter. I think their stock's very overvalued. I think they have a terrible balance sheet. And I have shared publicly a target of below $1. And the stock went down today. I think that the cannabis numbers were not that much better than expected on the revenue, but they were weak on the the gross margin and the adjusted earnings. Overall, the company, they seem to hit their numbers, and they just reiterated their adjusted EBITDA for the year, which I don't think that's so great. And I'll just leave it at that.
Good tournament, boys.
Tilray is not a winner, and you're not happy with this report, Alan. Is
What?
there a name that you do like quickly?
Oh, he had more chips than me.
Not one. There are 3 names that I share with my subscribers, and I'll share with you that I have in my model portfolio. I actually trimmed Kronos Group. It's the one I like the least. It was up today. And the 2 that I like the most are Village Farms and Organogram, my favorite cannabis stock overall. So that's the answer.
Village Farms and Organograms. Andrew, I know you're familiar with all things cannabis. What are your thoughts on some of those names or any others that we should be keeping an eye on in the midst of what's going on with the federal banking regulations, which could actually be favorable for this group?
Yeah, and so let me make a couple of points on that first. And Alan, nice to meet you as well. And I will definitely defer to you. You follow the public markets way more than I am. I'm more closely aligned with the private and smaller cannabis companies. First off, my thoughts, any bet in the public markets in cannabis, about half that bet is on full legalization. I don't care which company you buy. I'm a big believer that's going to happen. The question is how bumpy and how long it's going to take, whether we're going to get there through reclassification or descheduling.
Oh, almost gave us 625 million.
Like you've got up here right now, past the Senate.
Go to the big table, just
So
go
we're
all
a little
in.
bit closer. That said, we all know our Congress is
Wait,
in
what
utter
the heck?
disarray right now. I don't think anyone has a crystal ball. I'm hopeful the Safer Banking Act will pass, but I'm not going to tell anyone it will pass or not. And if you are going to put a little bit of money in the cannabis public sector, yeah, I would follow people like Alan that really track it closely, be super careful. I know in an earlier show, I said, hey, you could throw some dollars into TrueLeave. I would retract that at this point for certain. Their management team has gone through all kinds of chaos with their CFO. I think they went through 2 CFOs recently, and they have a very young CFO right this second. So just be very careful, and it's going to be a bumpy road on cannabis one way or another.
Yeah, and Alan, thank you also for some of the names that you did recommend so people could check those out if they would like to. In the meantime, we know shareholders in cannabis have been hit really hard. They've been waiting a long time to see some profits.
We'll check it down.
Those stocks have been hit. Alan Brochstein,
Andrew
Hunziker, thank you both so very much. Wonderful to speak with you both. Thanks for being with me here on Schwab Network. I'm Nicole Petalides, 11 a.m. and 2 p.m. right here live from the New York Stock Exchange. But keep it right here. Oliver Rennick, Market on Close next.
4 minutes to power hour. Still waiting for that little pullback on AMC. Not sure we're gonna get it. Ripping there, 7.5% now. Breaking out. 8.5 is horizontal resistance. Kind of a first major level. There's 8.5, that's 8%. No hearts. Clubs, dang it. Shouldn't have gone all in. Pair of threes. Pair of threes. 12 p.m. I actually breaking out. Yeah, we're gonna see the SPY go maybe here. For power hour push. Happy to be out for the day on SPY. This would not have been fun to hold through. But I would take the calls here potentially. Give it his power hour. AMC button up against that $8.50. The AMC option chain is so annoying. All the adjusted prices and stuff. Picking up a little more. See if AMC can break this. Here goes SPY, power hour push. Getting it. Hold it, pocket sevens. Whoops. Jeez, Fidelity. GME up 1 1/4. I should stop playing the tournament. I can't pay attention. Pocket 5.
Notable drop. That's a big red candle in crude oil. However, $95 also was a pretty clear line in the sand. We had multiple conversations about that level with our guests, including Bob Iacchino, who bailed out of the trade basically around there, looking for some chop around 95. You can see where that was the kind of delineating point between crude oil's big high levels from COVID and then everything else in the trading range. Once we got through 95 last year, we hung up between 100 and 120 for like 2.5 months. And then when we came down through 95, we never went back above it. So that line should have been an area of resistance. It's acting as resistance. If crude oil then turns around and goes back down, maybe there's an argument to be made that the reflation scare of the last couple months is overrated, but let's just give it some time here to breathe. Last thing I'm watching is Tesla. It's a really good day here for Tesla. We're going to talk about the news. There's not a lot, frankly, that you would think would be a big reason for a 5%
Full
rally.
head and shoulders there.
The chart is
SPY.
a beauty right now. Tesla's gone through this triangle pattern many times in its
We move
history.
back to VWAP.
It really does up the tension when you've got higher lows off the bottom, but then lower highs off the top. It means there are forces in opposing directions squeezing each other, and at some point this thing's going to move out of that range, and it could, hopefully will be a big one. It'll make it clear for us which way risk appetite is moving. So even though many tech companies have indeed broken over the last 2 months, Tesla has not. It still is making higher lows. Nvidia has not. It still is making higher lows. But Tesla's also not making really higher highs so much anymore unless it breaks this pattern to the upside. Maybe like a week or two left, and earnings, of course, coming up. So you need to be watching Tesla pretty much every day, I think. We got Kevin Hanks from Renita
So
on
now
joining me
another
this morning.
Theta
So let's start with some of the
Farm
big tech stuff here with
members.
Tesla, Renita, because
Position,
they had deliveries
chat,
earlier this week
message.
that seemingly were not
Thanks
perfect.
guys for your thumbs up.
But
Got
market
16
didn't
for
really
power
punish
hour.
them. Then Ford announces deliveries. The market is kind of punishing
Not
them, or
great,
at least rewarding
but
Tesla.
still
Is
appreciated.
that how we get into this conversation? I mean, is there some real news here?
That's part of the reason. Tesla has been a beneficiary of this rally with Ford today. However, the bears had been waiting on a weak number for Tesla, and they kind of got that when deliveries missed part of the expectations. And so today, analysts feel like there might be some short covering going on as well with Tesla.
And there was no freak out from the analyst community yesterday, at least not from what I saw. Big price target slash. And to your point, I think people did expect a little bit of a slowdown.
They did expect a slowdown. That ahead of the earnings was expected in some measures. But today, Ford is doing pretty well. It's because it definitely posted better than expected deliveries when it comes to their EVs. But not just that, Ford happened to post better than expected sales in their EV sector, their gas, and their hybrid vehicles, and that's pretty good. And it also became the #1 selling truck manufacturer again in the third quarter and year to date. Now, the F-Series expanded its lead as America's #1 selling truck.
Hopeful thinking.
Sales rose more than 13% year over year. Ford's truck lineup also remains the industry's top seller. And then overall, third quarter truck sales, including pickups and vans, are up more than 15% year over year. Then the company saw record EV and hybrid sales. And then it saw some pretty strong commercial transit vehicle sales as well.
Okay, this is kind of one of those pick your interpretation, choose your adventure, Rorschach tests for traders, because their growth on EVs is there. To your point, the deliveries weren't bad, but again, it's just that when Tesla's, doing 100,000 units roughly for the quarter, and Ford's doing 20,000 electric ones, so that's kind of your apples to apples. It also just kind of reminds us how much work they got to do still.
It does, and it also reminds us of how little it takes to impress today in markets, because we've been having sleepy markets since Monday. We've only today started to see something a little bit different when we close out the day, hopefully.
Yeah. Well, we got some gains on Alphabet too. Kev, jump in here, because when you've got a few big tech companies working, that is kind of all it takes for the NASDAQ to sidestep some of the pressure of the last couple days. I mean, everything from Apple to Alphabet. Apple not big, but there's some key companies here that are showing up right in time to save this market from pushing further into the 4,200s for S&Ps.
Yeah, Oliver, after 3 days this week, the Magnificent Seven have shown up in 2 of the 3 days, right? Monday, all the Magnificent Seven were up except Tesla. Tuesday was a global sell-off where everyone was heavy, everyone was down, the data worked against the market. There was really not much positive news. But today, we were starving for some type of soft data that we could attach our bullish hopes to. And I think we got it with some of the ADP numbers and some of the mortgage apps numbers. There was some soft
AMC
data
can break out.
finally in something that we saw in the labor market. Now, we know that the correlation between ADP and non-farm payrolls is not always strong, but at least for today, it gave us a nice little recovery. And the Magnificent Seven, including Tesla,
I had these calls in the long term.
Today, Oliver. So I
Still
think
have 10 calls for October.
Looked at
Need a
lower
breakout
yields,
for these to
looked
even
at lower dollar, and looked at
back to break even.
significantly lower crude oil prices and took a little comfort or took a bullish tone out of some
Have
soft
until
data and was
20th.
able to move it. Now, you still got some big names
seeing
down.
the money.
The Dow is underachieving. Boeing is still having a rough day and a rough time. That chart on that stock looks horrible. But that being said, the macro picture itself, 9 of the 11 sectors of the S&P are higher, utilities and energy lagging. Although, frankly, Oliver, I don't know why energies are down at $85 crude oil. They're still going to make money hand over fist, and their balance sheets are going to continue to get better. They're going to raise dividends. They're going to buy back stock. So $85 wouldn't make me sell any type of energy stock, but they are down in unison with crude oil prices. But that macro picture is still very strong, as you know.
Yeah, and even if crude does soften up here, there's always a way to spin that positive for the market, right? Okay, at least 1 point of inflationary concern, perhaps a little duller today, possibly. Here's another story, too, that could have caused problems, but appears not to be, is Apple's hot phones. Shares are still holding 173, but maybe Alphabet and the new Pixel can kind of swoop in on them, because Apple's having a okay day, but Google's actually having a good day here, Anita.
Oh, yeah, not to be outdone by Apple, because they released a couple of new phones as well, and they're the competitors to the Apple iPhone 15 slate of phones. Now, Google Alphabet released its Pixel 8 and Pixel 8 Pro. They start with the Pixel 8 starts at $699. The Pro starts at $999. It's about $100 more than last year's Pixel 7.
And less than the iPhone at the high end.
It is. That is true. Point taken. But guess what? It includes some new tricks here. It's got some AI-powered editing tools, right? There's this thing called Best Take. You know how when you take a photo, everybody's not smiling, somebody's got a blinking eye, or this Best Take feature allows you to combine similar pictures so that everybody's smiling and looking at the camera at the same time.
This is getting so ridiculous. So it's not a real picture.
It's playing to the...
Here's our family, and we're all using images from different moments.
Different moments, but it's playing to the desires of customers, which really just matters. It only matters that you play to the desires of customers right now. They've got this audio magic eraser. It erases some background from any audio in a video, other AI tools. But this phone is special because it uses Google's AI chip. It's in-house chip, and it allow it to leverage that AI and machine learning resources better when it comes to things like the camera and other parts of this whole ecosystem now.
Well, look, I'm not going to inject my bias as a Pixel user, but all I'm saying is I think the chart, I'm a price is king guy.
Oh, boy.
Not just for the charts, but also for the cost of the product. Price is king when it comes to Alphabet's chart. I mean, it's one of the best looking big tech trends out there right now.
Well, are you going to get the smartwatch? Because that came out today as well. It starts at $349.
No watch. No need. Don't need another phone on my person.
Okay.
Alphabet at 135 right now, only $4 off the high from last month. So there is a rock for this market alongside NVIDIA too. All right, pretty good day here. Thanks, Rita and Kevin, for taking us through it here. Equity is well supported by the NASDAQ and tech. But over the
there you
last
go. SPY almost high of the day.
We've gotten a warning that inflation is still sticky
That
and
ain't bad.
problematic. Doug Fincher joins us from Ionic Capital Management. He's a portfolio manager and seems generally still focused, Doug, on how to build our portfolios up against inflationary risks. So where are we in that process, and how much should we really be bracing for inflationary pressures still in our investments?
Hey, Oliver, nice to see you. I know you've been in the higher for longer camp for a while, and I think that's
right.
Clearly what that's what shook the market this past month. There's a really interesting article from Nick Timrose in the Journal today, and he tends to have the Fed's ear and vice versa. And the thing that he talked about was inflation volatility, and I think that's pretty interesting. We come from a period of disinflation for a long time, and we think clearly you're in a period of inflation, and a lot of investors haven't seen that. Apologies to Kathy Wood, but 0% interest rates and 2% inflation are not the norm.
Valves, you bought?
10-year is the norm, and inflation elevated above the
Don't
Fed's
respond
target,
if you are.
with the potential for spikes like we saw last year. I think that's the norm, and that's what we're expecting.
Last year, it was really brutal on the 60-40 structure of the portfolio because our stocks sold off at the same time as our bonds. And there was also a big yield curve inversion that was going on at the same time. Today, we've got something different where it seems like stocks still are not a big fan of yields going up. But we got a little steepening this time around, and the Fed's not even having to cut. Is there some hope here, Doug, that maybe there will be parts
a nice trading day
that work? Maybe we can hedge for inflation
nice to
and
keep
stay
that
within
chop
the
up from
stock
this
asset
morning.
class? Is that possible?
I think that's
Could have
possible.
taken the
One of
calls
things
here, but whatever.
You know, the economics 101 says inverted curve means recession. And I think naively, a lot of investors were looking at the curve being inverted and saying, "Oh no, it's an acknowledgement that inflation is going to be under control and everything's going to be fine. We're going to have a soft landing." And I think it's a lot more complicated. You said that, as you said, that inversion's narrowed by about 100 basis points, but with the long end moving up, and you know, rates at that level, you know, can break something. It's you know, I saw today the short interest in KRE is higher than it was during the March banking mini crisis. You know, you could argue that
I still going
things
there?
are as tenuous for the banks in this kind of environment. Not to mention private credit, or you know, anybody that's lending, anybody that's borrowing at that rate. It's difficult. But you know, back to that inflation volatility. You were talking about energy prices before. If I was on the show 3 weeks ago, we would have been saying, "Oh my God, $95 crude." You know, next stop 120.
There it is, almost a high of the day.
2 weeks later, it's a sigh of relief that we're at 85, and I think it's kind of hard to argue what the driver is. But one of the things that you know we've been saying to clients is that
A month ago, I would have never imagined this could have happened.
in a recession, you know, you
2 months ago, before I was really trading SPY every day.
The supply.
Now that I've been watching so much more closely, like trading,
OPEC says cut, and
you can see it doing this.
See oil go up. So you know that stagflation
Big bullish move
scenario is it's always out there. I think it's got to be a risk, but it's been, you know, you talked about this year. It's actually it'll be the third year that people have gotten pummeled by bonds.
Wondered if this would have been a better trade today. Well,
I mean, the
happy with my gains. There's new high on the day.
Is
I could keep
higher rates,
rallying
higher
for sure.
inflation, and this product's done
Got 45 minutes left.
extremely well since we launched it a couple
Might
years
start
ago. I was
a
looking
little short
today.
squeeze into this
We're
week.
up over 5% on the inflation ETF since we launched in July of 22. The ag's down over 5%.
That RSI divergence. Let's see, it's not in the
tips
daily.
are flat. So you know tips they protect your
But
money,
it
but
is
you don't
on
make any money off
the
inflation.
4 hour?
This
Yeah, it's on the
product's
4
designed
hour.
to, there you go. You're stealing my thunder.
There's
You know, we're
SPY
designed to make
ripping.
money off inflation, and
Up almost
it's interesting
1%
that we
now.
generate that performance
Dang.
when everybody would
Taking
agree
it.
inflation's actually fallen. You know,
I actually didn't have much buying power
those
left.
big 9% CPI
I'd averaged
prints
into those other
over the
positions so
summer of
much.
last year that you know sent markets in a
And I
tizzy.
didn't.
So it's come off those high levels, but it's still elevated above the Fed's target.
What a
and
nice
that's,
trading day,
you know,
man.
We can make money off of that through the positioning in inflation swaps. But
So
I think that
walk us
Go
through,
ahead,
remind
sir.
me, Doug, how you construct this. What's in there? Because it looks like what you're presenting is basically an alternative to the ag or our bond holdings in general, not necessarily like an overlay or a kind of a side speculation. This is basically a replacement for core bond exposure.
well, I think
Your
it's
profit target
it's
for
an company,
calls.
and the exposures are
Probably
very
better to
straightforward.
trade
We own
tomorrow's
5-year inflation
with this
swaps,
late of a
which
day
are
move.
It's a clear derivative that gives you exposure to higher inflation and inflation expectations. Super liquid market, but it's an institutional market. Derivatives don't require a lot of collateral, so we just the fund owns 1 times notional of
Crazy how much it
tips.
fought it,
We've
how
got
long
some
it took through all
essentially
this earlier in the day, and then
some interest rate call
whoop,
options through swaptions.
just in half an
And then
hour
with
it does
the
that.
balance of the capital, we're invested in short-dated tips, and you know tips are really attractive. You've got a 2.5% real yield embedded in the tip plus inflation, so it's on a standalone basis. It's a reasonable alternative to treasuries, but again, you're not going to make any money. The exposure to inflation swaps is really
You sniffing out the bots?
the recipe, the ingredient that allows you to make money off of that higher inflation. And essentially,
Guys already trying to click
anytime
blinds.
inflation's printing higher than the expectations, and 5-year expectations are 2.5, you're making money on your swap position. So we think it's it's a perfect way to hedge against higher inflation and higher inflation expectations.
Bingo. All right, there it is. Well-timed discussion. Good refresher here on the options that we have here to try and protect ourselves.
Thought I was
from
trying to
macro
bluff
threat.
him off.
Appreciate it, Doug. Good walkthrough here.
Thanks a lot.
You got it. Yeah, absolutely. CPII is the ticker, beating the heck out of the corporate bond world and a lot of other ways to try and hedge inflation. Thanks, Doug. Ionic Capital Management, rather. When we come back, let's talk some small caps. Take a look at the Russell's weakness on a day like today, adding up to the recent norm where the Russell trails both year-to-date, year-long basis. But there's always some fun hunting for specific companies in the small cap world. We'll be right back.
Doesn't give me an opportunity to bluff. Okay. Wow, look at that SPY. Get that. What could I have taken? Maybe I could have gotten a couple contracts, maybe. I was pretty exhausted already by then. Failed trades this morning. Sixes. I don't usually like to play that aggressive this early in the little tournament. I like the blinds to get bigger first. Still going there. At the top of this range. Crazy big range today. This guy's got nothing. And 7. Well done, sir. I'm trying to muscle me. Pocket 7s. Good game. Alright, I'm gonna review the trades. I want to review.
On both bank lending and VC funding, and the VC funding has also either dried up or moved on perhaps to funding AI and some of the areas there. Having said that, there are many other sources of funds out there for these banks.
Morning.
And what we're seeing, I mean, for these
I'm
small
doing
cap
less and less trades on my trading account
with
because
our
it's getting
companies is
smaller.
they have been able to
And I'm trying to just make bigger trades, fewer
refinance
trades.
debt when they need to
But I ran out of buying power this
reasonably
morning
attractive
because
rates as long
got
as they
stopped.
have those strong balance
We'll
sheets
go over it.
and improving margins.
Well, it's really interesting
We'll go
because
over
you're going to get the specific companies
first
that
trade
don't
today.
have that type of credit risk.
Oh yeah, it was a strangle. That's right. That took a lot of the buying power this morning. It's kind of a stupid trade.
There was a big enough pocket, maybe.
That's in case the data
around
really
some of the
ripped us out of a range.
venture
Got a
connected
423,
small cap world to
422
those West
strangle
Coast
at
regional banks.
944.
Been like a little
I'm gonna
credit
turn this
crunch
off.
within the world
At
of small
944. The data coming out. Wait a minute. Yeah, because it came out 945. I got it 10 seconds before it came out actually. Yeah, strangle. 423, 422, call and put. 944. Right here. So that first date at 945 didn't really do anything. Didn't really move the market. We had more data at 10. I considered that, but yeah, so open that up, and then at 952 I closed the put. Right here. This candle. So not a bad exit really. Basically low of the day. Close the put, was up a little bit. Close the put, and then 953 close the call. Right there. Didn't know we were gonna get that move. So small gain on that actually. Kind of a waste of buying power though. And then after that, let's see, 10 o'clock I bought 4 puts. 10 o'clock. Where is that? Right here. 4 puts right here, 10 o'clock. But Webull shows it like this is 10:01. I think that's showing where the candle ended. It was actually on this candle. Somewhere. Maybe like midway down here. Bought 4 puts. Sold 1 at 10:03. Right here. Sold 1 at, or sold the rest 10:14. So held that a little long. Oh, those are the ones I stopped out of. Yeah, dang it. That would have been a nice up on this account. The early morning options have a lot of IV, so yeah, I sold the one for profit and then I got stopped out on the rest. That bounce just barely, literally like just barely ticked, and then it came back down. So that was basically all my buying power for the day on this account. Let's see, stop, and then I bought 1 put at 10:15. So far all those trades were profitable. Bought 1 put at 10:15. Yeah, I was so upset I got stopped out. Bought a put here, and then closed it. Yeah, I waited too long. Closed it up here for a loss. Why did I wait so long? I don't know. I wanted the continuation. Yeah, close it up here at 10:37 for a loss. But the account's still green on the day, only up 1%. That's the trading account. And then I switched over to the backup account, secondary. However, the problem is usually that's not until later in the day. So the patterns in the chart are more clear on what's going on than 10:35. I opened up calls. Yeah, this was bad. These calls would have been fine if I had set up a stop loss, taking some profits. Not expected a big move. Did I do it? I'm not sure. No, I didn't open up calls. I opened up puts. Opened up puts right here. Interesting. Top of the channel. I did have a channel in here this morning. I'd like to clear it up as we go throughout the day. That's more clean. But yeah, we're at the top of a channel right here. So open up puts. 4 of them. 5 of them. And then 1037. I closed them all. I thought I was wrong. I'm gonna cut losses. 1037 right here. So then I was like, uh-oh. And then I started to feel that whipsaw. And puts closed. Didn't close until up here. Oh, but no, I was trying to. Yeah, so I was actually not doing bad. I got back into puts at least at the top of the range. That was my thinking. Okay, it's a channel. I'm not gonna get him on a breakout. I'm gonna get puts on top of the channel. Write it down. Got him a little early. Then I got shaken out. Closed him. Yeah, again, I should just sat a little bit longer on my hands there. The morning volatility just sometimes gets me. So this is where I whipsawed. I just held those puts, money. Everything made sense. Top of the channel. Had to make a little head and shoulders above the channel. Really, it was a little breakout, but whatever. Made the head and shoulders. But at this point, before that happened, I got into calls. Closed my puts here. Got into calls because it was a channel break. I didn't give enough time on the puts. Got the calls. Yep. Got the calls at 1037. Right here. Yikes. It's breaking. We start chopping around. We see the head and shoulders. I even call out the head and shoulders. At that point this morning, I'm like, all right, I'm just going to hold these calls because we'd had this kind of tapering bottom. We had this steeper trend here, right? And then it was turning into this less steep bottom here. So, of course, in hindsight, it's like, oh yeah, it's so good. At the time, I was like, this is still somewhat a theory. Like, just isn't necessarily like it's possible we come back down and re-break through that low and get back into this lower, steeper channel. But that was my thinking. It's like, okay, we're kind of tapering here. Potentially, this is a bottom already. So I'm gonna ride out my calls, even though I saw head and shoulders here. Thought about opening up puts even, but I was like, I'll just hold the calls and average. Given I knew at this point I'd already whipsawed, and I missed. I closed my puts, bought calls, and I'm like, all right. This is where you have to like, it's like on a carousel. How do you describe it? It's like when you're on like a seesaw, like you get out of order and you start just hitting it, which doesn't really happen that often, but you have to kind of wait for it to go through one cycle to catch back on and get in the rhythm. And that's what you gotta do in the market. If you start whipsawing, you just have to wait through one of the moves, or basically inverse yourself on one of them. If you find you're not holding, and then it. So that's where I held here. Even though I knew it was at the high, I was like, all right, I'm just gonna hold, and I did. So got the calls up here. Bought 5 up there, and then bought 5 more at 1041. Okay, yeah, I was still thinking the breakout. I was averaging in crap. Okay, at this point I was still thinking we're breaking out. Bought 5 more there, so then I was pretty heavy into calls. Bought 5 more at 1103. So that's when so I'd already averaged in once. And then I saw the head and shoulders. I'm like, all right, I'm holding that whole thought process. And then 1103, very nice entry here. Look at this, kind of a little double bottom. It was a higher low on that green candle on the breakout. Happy with that. Could have even gotten more, but at that point I was underwater on them, and it was a large position at that point for me. More, yeah. So got more there. 1103. Then we started going up. Phew. Thank you. Wait, no. Okay. Yeah, that's right. Okay. So I still think we're in a channel to the downside. Right? Because we are. But gosh, in hindsight, it's like, oh, stupid. I did see this taper, I just didn't believe it. Stupid. Okay, so at 11:02, 11:05, I sold some right here. The ones I bought here and here, I sold some right here for loss. I was trying to basically mitigate my loss at this point. I sold 5 out of the, let's see, 15 I had, I sold 5. And then 11:05, sold another 5. I thought we were getting inverse cup and handle. I think that's what I was thinking at that point. And then at 11:07, I held a little longer. 11:07, I sold another 5. And then I had 5 left. And at 11:08, I sold them. Too jumpy, over trading. It's not like it's over trading in the moment though. It's more, it's just too hot potato because the market's so volatile in the morning. And if it's choppy and if it's doing crazy stuff like this to shake you out, it just emotionally messes with you. And that's why I'm not thinking we're just going to keep rallying, break VWAP and do all this. Even though I clearly saw this bottoming. Yeah, this was my biggest mistake today. I had like 20 contracts, all average down here, calls, which, you know, that would have been a huge move. So yeah, got shaken out. I didn't want to. Problem was also, it was already down. So if I wasn't down that much, it would have been much easier to hold this. But I played the breakout and then I held because I didn't want to whipsaw. So I was basically trying to get back on the rotation of the market, back in the saddle. Little head and shoulders on AMC, probably come down to VWAP. I didn't sell too early. It's crazy. Okay, so yeah, sold, and then sold my last 5 at 11:08, right here. Yep. Even though there's no signs of it stopping, it was breaking out more or less. I mean, it's getting up to VWAP, but that was rough. But I wasn't down too much because I averaged down here and closed on a bounce, so I wasn't down too much at that point, thankfully. Then next trade was 11:14. These position sizing was bigger because I was on my secondary account already, so that was another problem with what I was doing today. Got into puts, so into puts 11:14, seeing the top of the channel. Still not thinking we are reversing. Basically, as you see, it's on this channel. Trying not to buy puts at the low and calls at the high, so I'm in puts up here. 11:14, got 5. Got 5 more at 11:25. Well, that's kind of interesting. Why was I averaging into that? I still wasn't really convinced. I thought it was going to be a choppy day. It was near the high of the day. I was thinking cup and handle, that's right. 11:25. So, bad timing specifically on those, but I was thinking maybe cup and handle will get a pullback. 11:25 got more puts. Yeah, that sucked too. And 11:38, I sold all of them. So, right here. Realizing we're just chopping up in this range and I don't know which way we're gonna go. I just want to get out. So took a loss on those. And that's when I was down pretty good on the fee count. Then turns out this was just bulls building liquidity all this morning. Then I was buying calls. Once we had the breakout, I had the volume, I was seeing what was going on. Then calls. 11:52. So right here. And the big break, channel break, everything's breaking, looking good. As a pullback, I get calls. I'm still nervous getting calls here because it seems like high day, like we're really gonna keep rallying. But anyways, got calls, got 10 there. So actually went in heavier than I was comfortable with. Given how volatile it had just been, I just Yeah, I was heavy, too heavy. Should have gone slower. So with that, I closed out 5 pretty quickly. Closed out 5 right here, 11.56 for small profit. I was down to 5. It was fine. But I averaged in, bought more calls at 12.06. Right there. That was a little sketchy because that was literally like, we were in an upward channel, but that was right on the head and shoulders. But I still had conviction. Got more calls. I got 5 more there. And then I got 5 more. Yeah, this is what saved the account, was just how heavy I traded this last bit. Well, no, that's not true. I shouldn't say that. What saved the account was the reversal, the fact that we had that huge reversal. That wasn't that huge, but I went heavy there too. Just because it's a setup that I'm more familiar with, I guess. So 12.16, I bought more calls, 5 more. Where are we? Yeah, right here. 12.16 right there. So at this point, I think I had like 20. No, I had 10. I had 10 at that point. And given you can see, I mean, I didn't know at the time, but it's like, you know, already pretty high buying all these calls. Anyway, I sold 2 at 12.23. 2 right around here. I think that was probably pretty break even, honestly. Sold 2 more at 12.29. So we're back up here. I notice we're kind of starting to chop around a little bit, and that this momentum was starting to taper the top now. Starting to get a rounding top. Same way we had the bottom. Signs of the reversal starting. We're getting at the top. I didn't quite see it yet though. But maybe I did, I'm not sure. But I did start to sell just in case. Sold 2 more here at 12.31. Sold, I think that's the last 2 at 12.35. So yeah, that was the last 2 I sold there. And at that point, I'd seen this top. I think I'd drawn this one in. Yeah, I don't know what I drew in and taken out. Yeah, so then I'm like, okay, looks like we could be reversing now again. This was all pretty early still. Problem also though, this was middle of the day, it was noon, where we can very easily just chop around and, you know, lose to theta burn or whatever. But I did see what I saw, and there we are. So 12.42, I started getting into puts. No, whatever. Yeah, wait. Oh no, I sold the rest. I had 7 more. Holy crap, I had a lot. I sold the last 7 at 12.42. Kind of, yeah, over here. Sold the last 7 on the break of the channel. We're close to it. I think it's here because Weeble's weird. So those were, I don't know, maybe a little profitable from back here. Not a whole lot at that point. Some of those exits were though. Then this was a trigger for me to buy puts. So 12.43, I was into puts. Okay, 12.43. 12.43 right here. I was into puts. Down pretty good on the count. Went in pretty heavy. Got 10 right here. These are tomorrow's. I got them for 422. 422 strike. And then got 5 more. 5 more at 12.46. Right here. So believing that we were rolling over. 5 more there. And then 5 more at 12.48. Didn't quite get that top, but did get this green candle. Or maybe it was here because of Weeble. 5 more. So this point I had 20. And then 5 more, 1251. Yeah, I was going in heavy. So 25 by that point. This is what really saved the account today. Went from red to green. And then it was just patience. The first initial ones I want to take, just lock in some profits. I can set stops. I didn't really need to set stops on it just because it was pretty clear what's going on, and there wasn't data coming out that's going to change everything around or anything like that. So let's see. Yeah, started selling. So 130. 130 I sold. I waited a pretty long time. I did well on that first sell. Is that the first sell? Yeah, wow. So 130 right here, close to VWAP. I sold the first 5. So now I only had 20. Sold 5 more at 130. Then I had 15. Sold 5 more at 203. Oh, right here. Wow. Almost the perfect bottom. But you gotta average. That's how you get a good average low. Then 204, I sold 5 more. Then I only had 5 left. And I sold 1 at 205. Sold 1 at 208. So we had that little bounce. It came down a little bit. 208, sold another one. And then sold the last 3 at 213 once we'd started to show some reversal. Broken the channel. Then I was done. I didn't want to trade, even though this move was somewhat not expected, but yeah. Since the bears couldn't break it out of this channel, you have to imagine we're going to rally back up. It's kind of just the way it goes. So yeah, that was it. Those are the trades. Small accounts up 1%, secondary count. I don't really know percentages on here, but did pretty well. And nice day for trading. Not too choppy. Gotta mitigate those morning. Considering not even trading sometimes in the morning, it's just I'm trade with smaller position size. That's where it helps using my trading account because it's so much smaller. But yeah, so I mean, some days you get the move. It's not like this, right? It's just it opens and then it does this, and then it consolidates, and then it just keeps going. So yeah, I mean, you could get in here, but sometimes you'll always get a nice entry, like maybe a head and shoulders or bear flag, and then you miss a big part of the move. And if you just gotten in on like a early morning little head and shoulders, you would have been better off. So that's why I kind of want to get contracts in the morning, but it might hurt me more than it helps me. So I guess I just have to work on it. Work on the morning. Yeah, those are my trades. Busy day. Yep. Busy day. Not even do the whole last trade that I was talking about. I'm like, I could get calls here on the break of this, given it did a little McDonald's M down here before it ripped. But yeah, there was one whole other huge trade that would have actually been better trade than what I took from here to here. That was a bigger gainer. It moved faster. But sometimes you get this whole move, in the beginning of the day, and then the rest of the day is just a chop. So it's just, I guess, being prepared. Risk management, I guess, good enough to where you don't blow up an account or live to trade another day. It was I didn't think I'd be able to go green today. No way. After what's going on this morning, the whipsawing and then too big a position sizing, I just kind of had to go with conviction and keep averaging, even though that was scary. And on the downside, not quite as scary because it's moving slower and it's a little more clear, I guess. Yeah, I have a headache. See what tomorrow brings. 10 minutes. Fugazi. AMC didn't break that 850 level, but did break out of that wedge. So looking good. Nice volume too. Like to see it hold above here and keep breaking some resistances. I didn't average into any calls on AMC. I was looking for a pullback. I have an order for one for a price that probably filled me if it was close to VWAP. Can't be certain, but it was similar to pricing of the contracts that were here. Might be more expensive here, but anyways, if it does pull back, I'll get some calls on AMC. I think it has pretty good upside and potential catalysts with Taylor Swift, any info on that coming out, numbers, and I think they might actually make pretty good money from that whole thing. And Beyonce said she's gonna do it with her tour. She's gonna have a whole production of her concert, same thing that Swift did. So it like it's the first like real signs to me that there might be another leg on cinemas. Like, I never thought it was completely dying, but I thought it was there's just a lot of market share is going to streaming, of course, and has been for years. But with the whole concert thing, and the artists are going straight to the theaters. They're not like with Taylor Swift. I think it's her family that's like funding it, producing it. So there's not even Hollywood that's in part of that. So AMC is getting like close to half the revenue or something crazy. Yeah, and then thinking of like concerts in the theater, I could see that as being that's if I was like super into concert, like a concert junkie person that people are. That is something that I would probably enjoy watching the theaters, just being, huge screen, great speakers, really loud. Especially if I was at those concerts and I kind of like relive it, re-experience it in the theaters, and depending on how they produce them, like maybe even be in it, like maybe get some crowd shots where, I don't know, you flash the cameras or something or whatever. I don't know, wrote a B on your stomach. So maybe even getting to see yourself. Like if you could people would think that they might actually be in the movie. I think that'd be a big draw for everyone that went to the concert. People love to see themselves and love to be famous, and if they thought, oh yeah, I was in the crowd and they were filming, I saw the cameras, I bet I have a shot in that. I saw the dolly, the big crane was flying over and whatever. I want to go and watch, and I bet I'll see me in there. I don't think there'll be a whole lot because it's probably gonna be super fast paced, but I really don't know how they're producing it. I don't know. I'm assuming it's gonna be pretty quick and mostly of the singer, but anyways, I think that could be a pretty good avenue really for them. Billions. 43%. I know that's kind of insane, right? 43%. Like, I don't know if Beyonce's deal is the same way or if, so yeah, anyways, with that catalyst on AMC, I've never been this bullish on AMC. I guess partially because all the equity they raised and the market cap is right now is so much better than it's been for so long. Given the equity they raised has been from dilution and has totally killed their market cap, but being this low is attractive with those catalysts as well. So we'll see. The only catalyst I have for GME is really merger acquisition, which is we don't know when, we don't know who, we don't even know if it would be a good one. So that's why I'm like with GME, I'm not as bullish. It hasn't had a sell-off either like AMC has, so it's not just gotten so cheap where it's like, oh yeah, gotta buy it. Given they're in a much better financial situation. But I don't know. There's some positivity in AMC. It's kind of strange. I was always saying AMC is going to go bankrupt, and I think it still could, but they might stave it off. Stave. I'll take it. Stave. Nothing else. It's a good buy right opportunity. These contracts still have pretty good IV. 99% on the monthlies. But yeah, it's gotta break out here, otherwise it's just a bear flag. First breakout today. See what tomorrow brings. 5-minute finger slap. Thank you guys for your support today. We do. 16 likes, appreciate it. Need another bankrupt company to attract a bunch of retail sentiment, and I'll start covering it and get those likes back up to 30 and 40 and 50 and 60. I'm excited to see what happens with barbecue. I've been meaning to actually call brokerages and seeing if I could buy it, any of them, but I'm pretty certain I can't, so I haven't even spent the time doing it. Well, I'm gonna cut off though. Thanks guys for your support. Appreciate it so much. Bada bangas? Bada bangas. Thanks for the sub, man. Does it still show the gift? Gorlami. Still show that one? Get a sub? Let me see if it does it. Yeah. Gorlami. Alright. Hope you guys had a good day. I think this RSI divergence is playing out, and we should see a continued rally, at least at the top of this channel, and potentially a break of that. We do have data still tomorrow, I think. Let's see, tomorrow? Yeah, tomorrow's Thursday. Big data tomorrow morning. Initial jobless claims at 8:30. US trade defs at 8:30. Mester speaking at 9. Daly speaking, Fed President Daly speaking at 12. And Fed bars at 12:15. So, see what that data brings pre-market. But yeah, this is a bullish formation, more or less. It's descending wedge. So this bull's building liquidity. They just have to have enough strength to break it out. If they do, then yeah, should see a gap fill. And setting up for Christmas rally, really. Maybe even a gap fill up here. That's kind of what I'm thinking. That's why I haven't bought any more puts on SPY, like longer dated, for February. So I'm thinking probably start getting some of this gap fill. And if it keeps going, try and average in as slow as I can. I mean, potentially even a gap fill way up here. At all-time highs, I can't remember. That would be, wouldn't it? I mean, it can come fast. Like, SPY can make up a lot of ground in either direction once you get just some volatility and money. I mean, in 1 week you could be at all-time highs. Just big rallies, big gaps. It seems crazy when you just trade in such tight ranges some days, but then it just takes like this. This was 2-3 days, and it literally gave back all of the gains from like a month. Just like, boom. I'm talking about this day and this gap and this day and then that. That was like half a month of gains. So it can go the other way too. And Santa rallies, we'll see. We'll see. Also election. Yeah, I'm very cautious to be too bearish into January. So thanks guys. We'll see you tomorrow, or see you on Discord. Have a great afternoon.